guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Okay, welcome everyone. Welcome to Stocks Never Trading. My name is Ron. My partner is Dave. Good morning, everyone. It's 7 a.m. Eastern, and it is Thursday, May 29. So we're almost at the end of the month. Tomorrow is the last trading day of the month, Friday. Again, be careful trading. This entire week has been a wild week, and tomorrow is Friday. So it's going to get a little bit more difficult as we go on, but just trade smart, trade with proper risk management. If you do take some losses, at least you can control the losses. When you get a little out of control with your trading and you get a little reckless and you don't manage your risk properly, then things are very difficult to manage. So just be careful trading these markets. We're trading now post NVIDIA's earnings. Some of you guys saw NVIDIA's earnings, pretty good earnings. They're up 6% right now in the pre-market, very close to their all-time high. So what the plan for today is we're going to go through the news and we're going to do two charts going into Comex. We're going to always do gold, and I'm going to switch it up today with doing US 30 instead of instead of NASDAQ right now. And then as we get right into 9 p.m., then I'll add NASDAQ, and then we'll watch all three of them going into Wall Street, okay? So thanks everyone for joining, and let's get right into this so we don't lose any time. And so just starting news-wise, if you were trading in Europe, you probably noticed that the Swiss banks were closed today, the French banks were closed today, and the German banks were closed today for holidays. And so a little bit of limited volume in Europe. But we also have some European news. The British banks are open and they have members speaking. The Italian 10-year bond auction already occurred. But this is what we're coming into, this North American block right here. And we do have two US red folders right over here. So we have our preliminary GDP quarter over quarter. And then we have our weekly unemployment claims. These are weekly, okay? So they come out every single week. So last week's unemployment claims, the number was 227,000. And this week they're forecasting for an increase of 2,000 to 229,000. And this is the number of individuals who are unemployed and waiting, seeking work. Okay, so we'll see what this number is week over week. Is this going to be larger than 229,000? Will it be less than 229,000, or will it be right around here? Okay. And then we do have also another news announcement coming out of the US. It's not a high impact. It's still a medium impact. It's a preliminary GDP price index. So it has to do with GDP, which is, we do have to follow that, right? It wants gross domestic product to see if the nation is growing its GDP or is it shrinking its GDP, because that will directly affect the US dollar and impact trade. And then we start to move into Wall Street at 9:30, and we don't have any news at 9:30, but we do start at 10 a.m. with some US pending home sales. You can see the forecast is negative from the previous month, so maybe home sales are a little slow than normal, and we'll see what that does. So if you're interested in the housing market, pending home sales is a good analysis over here. And then we have natural gas storage at 10:30. And then moving through the day, we have for crude oil traders, you have your crude oil inventories today at 11 a.m. Eastern. That's a good folder to be paying attention to if you do trade crude oil on a regular basis. And then we move into our late afternoon sessions. At 1:30 p.m., we'll be coming in and having a 90-minute session on the 2-minute time frame for some price action education. And then finally, we get into Power Hour at 3 p.m., and you have your Bank of England Governor Bailey Speaks at Power Hour in New York. And then if you do decide to trade later this evening in the Asian session, in the Australia, New Zealand session over here, there is a lot of news coming out of Japan. So if you've been following what's going on in Japan, they are hurting right now because they hold the second largest amount of U.S. debt. So they're suffering right now. I don't know if you guys read a couple articles coming out of Japan. They're in a very very tough situation. They've been in a tough situation for the past 30, 40, 50 years, and it's not getting any better over there. So it's good to also watch what's going on the other side of the world as well, and not just focus on what's happening in North America. Because the markets move 24 hours a day through all of these different parts of the world. So it's good to know, helps you better as a trader, as an investor, to know what's going on around the world, okay? And so going into earnings now, as you are aware, in the after hours yesterday, NVIDIA released their earnings. Pretty good numbers, forward guidance, everything like that. There is multiple articles you can read all about it. And right now, the market is responding where they're up 6% in the pre-market. So the market likes their earnings as of now, and we'll see how the market opens in Wall Street, and we'll watch the moves, okay? This morning, we have more retail outlets reporting over here. So at 6:45, which has already reported, if I refresh it right here, we have Foot Locker already reporting. You can see that the earnings were negative 0.07 cents was their estimate. That was what they reported. So they didn't beat, they didn't miss. Still in the negative for earnings per share. They did miss their revenue here. So it's a miss on 1.85 billion, 1.79. Growth is shrinking. Probably guidance is going to be very similar to a lot of these consumer retail outlets. Tariffs maybe would affect that, but there is news that the tariffs might no longer be. The court ruled against Donald Trump on the tariffs, so that's developing news as well. That could be another indication why markets are green in the pre-market. Due to that news. But just continuing, you have Best Buy, Kohl's Corporation. Again, they're big corporations, but not like Nvidia, those big names that we're familiar with. Okay, so and then in the after hours today, always double check. There is a big name in the after hours. So just like yesterday, we had Nvidia in the after hours. Today we have Costco. So Costco is a big box retail outlet, very similar to like Home Depot. Costco is a big one. Okay, so we will see what they report at 4:15 p.m. Eastern in the after hours. You also have Dell Technologies. So you got some big names over here, okay, in the after hours as well. And just going over the overall news. So Trump's tariffs in limbo after trade court's stunning rebuke here. So a federal trade court just blocked some of Trump's most sweeping tariffs. So a lot of those countries where he placed tariffs on the EU, they've kind of kiboshed that. Against Canada, against Mexico, kind of kibosh that. But this is developing news, and knowing Trump, he's probably gonna fight this and things like that. So, and just pay attention, because if any tweets, whatever you call them, whatever he does throughout the day could affect the markets. Okay, but that's developing right now. This was released yesterday in the Asian session. Okay, so Nasdaq leads U.S. futures higher after tariffs block. Not just the tariffs block; it has a lot to do with also Nvidia's earnings, I would assume. And then, so Nvidia pops, CEO warns U.S. chip curbs boost in China rivals over here. Court rules, Trump doesn't have authority to impose tariffs. So if you want to read up on these articles, the articles are all over here. What else do we got here? GameStop is buying some Bitcoin. They're kind of following MicroStrategy's lead over here. A lot of companies actually are starting to add Bitcoin on their balance sheets. We'll see if it will pay off, or we'll see if it's a risky endeavor that they're taking. But it's good. You don't have to put your entire portfolio, your whole 100% in, like kind of like MicroStrategy style. They're all in on Bitcoin. That's their game plan. That's what they're doing. But other companies, other corporations are trying to mimic it. You don't have to go all in, but you can put maybe a certain percentage on your balance sheet of Bitcoin, which has, if you look at the last 5-10 years, has outperformed a lot of assets. So we'll see. We'll have this conversation next 5-10 years and see where it's at. But right now it's trading near its all-time highs. I believe it's what, 108, 109,000 right now. All-time high is about 112. So it's very, very close, still consolidating up there. We'll see if we'll break out of there soon. What else is going on in the news here? Do you guys have anything in the news? Did you guys see anything that maybe I'm missing here that's pretty important? Right now in the futures market, S&P futures up over 1%, Dow 0.6%, Nasdaq leading the way 1.7% here. Gold relatively stable over here. So we'll look into all of these. Guys, there's a lot of articles here, so if you want to read on Costco earnings, the Fed speak. Remember yesterday we had the FOMC minutes, the summary released as well. So we have to start now getting ready for next Friday is NFP, the first Friday of the month. We're going into June. So NFP, and then we also have an FOMC announcement regarding the rate, the federal funds rates. So will they increase? Will they decrease? Will they pause? That will be big, and that will be Mr. Powell coming up very, very soon, guys. So just remember, if it's been a tough month for the month of May, you have today and tomorrow, okay? You don't got to go all out. You can start fresh again next week with a new month. If you've already had a good month, and don't go ruining it tomorrow at the end of the month. Take it easy, maybe even take a day off if you've done well. The markets are unstable right now. They're very volatile. So if you're a beginner trader, you probably could suffer as a trader. And this is not normally how markets move. There's a lot of uncertainty with this gentleman right here, Mr. Trump. And so you have to trade with the most proper risk management, if I can say that. Okay. I struggled yesterday, and then I walked away from the markets. I came back in the afternoon, and to my surprise, the markets were moving just a little bit better from the morning. I didn't recover all of my losses, but I recouped a little bit more, and made a shitty day into a better day, is what I'm trying to say. But it was tough. A lot of traders go through the ups and downs. Doesn't matter how many years of experience you have, the markets are above any one of us, and they can move. But all we can do is, again, I say, is always we can manage our risk. So where you place a stop loss in the market, measure the move so you know, are you risking $100? Are you risking $200? Are you risking $20? And if you're okay with it and you're not over leveraging your account, then let the trade play out and see what happens. Okay, and so we do have our signals. There is some that have been released at 6:30 prior to this call, looking for a sell on Nasdaq at 21,700, and also commodities here. We're looking right over here. This one came out at 620. It's already running. So that 32.90. If you've been watching gold the last few days, this 32.90 is a very critical point of interest. A lot of bounces off of 32.90. So we're trading maybe back to the psychological 3300, and we'll see what's happening up there. Okay. For everyone on YouTube, there is a free Telegram. This Telegram, it's free. It's pinned at the top of the YouTube channel for you guys. So it showcases everything we do here with the signals, with the live trade notifications right here on YouTube, and our blogs, trading summaries, and all of everything is available here for you guys. So this is the free Telegram channel pinned at the top of YouTube. And finally, if you do visit our website, stocksnipertrading.com, if you go over here to more and you click on blog, these are all of the free blogs available for everybody here. So there's probably something, this one is a good one to read. Like this was from May 15th, but it was to do with trading into a Friday. This one is heading into the weekend. So tomorrow is Friday. We're heading into the weekend. Also, it's month end. So why does month end matter? Someone asked me yesterday. They know it's month end, but it's not just because it's the end of the month and us as trade. It's because a lot of the futures contracts roll over into the new contracts. Also, not just in the futures market, but also in the stock market, in the equities market. Options like for Nvidia have monthly expiration dates, so a lot of the volume, starts to get real choppy at the end of the month, and then new contracts, new options start in the new month in June. So that's also a reason why Fridays are very important, especially if you know if they're weekly contracts or monthly contracts. So that's also why trading at near the month end is also very important, not just for you and I, for our psychology, but also for the actual financial markets. Has a lot to do with contracts rolling over into the new month and expirations and things like that. So when we start to get into options in the equities market, then these things that I'm talking about are going to start to make a little bit more sense to you. Okay. So lots going on over here. Free blogs, good education. If you're looking for something to read while you're drinking your coffee, I read some of these. They might help you out. Okay. If you guys are ready, let's get into the charts. So we're just going to mix it up today. We've been doing gold and NASDAQ for the past few weeks. And then we've been doing US 30 for Wall Street. So we're going to mix it up today. We're going to do always gold will be the first instrument we'll be looking at. And then today I'm mixing it up. I'm going to add US 30 and then I'll save NASDAQ for after 9 a.m. So if you guys are good to go, hit the likes on YouTube and let's get things going. Welcome everyone on Zoom. Thank you guys for joining. Trevor, good morning. Conrad, welcome. Danny, whatever happened to Ron wanting to break? No breaks over here, Danny. No breaks over here. We continue to go. Our breaks are on the weekend. Samuel, welcome. Good morning. Lukeman, thank you for joining. Wayne, good morning. Craig, welcome. Ephraim, thank you for joining. Ephraim, we're going to do US 30 and then we'll do NASDAQ when Wall Street market opens. Okay, so let's get in on gold. Okay, so some of you guys have already done your charting. Some of you guys have already been trading. Some of you guys have already hit your daily goals, and some of you guys are in a little bit of drawdown. That's trading. That's life. When someone is winning, someone has to lose. When someone's losing, someone is winning. Unfortunately, that's how the markets work. Hopefully, you have a more percentage. You're on the winning side of trading. You don't have to be a perfect trader. I don't think a perfect trader exists. I've yet to see a perfect trader. You might be perfect for a day trading, but can you be perfect for 2 days? Can you be perfect for a week? Can you be perfect for a month? Can you be perfect for a year? Can you be perfect for 5 years? I've been in the markets for 20 years and I still haven't found a trader. I haven't found an institution. I haven't found anyone that is a professional trader. That shows you how hard it is to do this. It's not an easy endeavor. And we're the crazy ones that continue to go into these markets on a daily basis. So I just want to say first thing is I respect everyone here. Whether you're winning, you're losing, or you're break evens, it's not easy to do this shit every single day. It's a psychological warfare as a trader. If you guys don't know what I'm talking about, every single day we go look at these candles right now. It's a psychological game, not just a financial game. It's very psychological. Other people go to work every morning and they shut their brain off and they just hit a few buttons here and there and they clock in and they clock out and they go home and they get a paycheck. You and I, this is very different from just turning our brain off, hitting a few buttons and going home and making a living out of this. This is very, very demanding. Like yesterday, I said, even I had a rough day trading, and I even said today I was going to take a day off. But at the moment I was saying that, I walked away. I collected myself. I went for a walk. I came back, and the markets, to my surprise, were moving a little bit better from that choppy morning, and the market started to open up. Again, I waited patiently for an A plus setup. I looked for it. If it was there, I helped recover a little bit of my losses. I didn't get them all back, but that helped with my psychology. It helped, just get out of that slump. Sometimes that's all you need is one trade. You can even go to a demo. You can even scale down just to get that groove back. And once you get it, you're reset and you're ready to go again. So, guys, I just want you guys to know that, if you're putting in the effort and you're trying your best, maybe your results are still not there. Just know that you got to put in a lot of work to get this done, to accomplish results in trading. And don't set the bar too high. Like Nvidia, the analysts keep setting the bar higher and higher and higher and higher, and Nvidia continuously keeps beating it. We don't have to do that as traders. You don't have to keep setting the bar higher and higher and higher and higher, because you're adding a lot of pressure towards yourself. Just maintain a realistic daily goal, and if you can achieve it, learn how to walk out of these markets, and not play this psychological warfare game with these markets, because these things can really, really, really affect you, not just trading, but your everyday life. Like when you have a shitty day in the markets, I can attest to this. Sometimes you're quiet when you're talking to your family, like you're just, because all you're thinking about is those losses in the market. You've lost some money, but when you're winning, then you're on top of the world and everything is great. And even my wife, she knows me for all these years. She knows when I have a tough day in the markets, and she knows when I have a great day in the markets. So it affects more than just your everyday trading here. It affects your everyday life with how you communicate with others and how your overall feelings are. So this is a tough game, guys. And if you're a beginner, like, just if you take it serious from day one, and you don't make all those silly mistakes, you might save yourself years and years of psychological warfare, I call it. Okay. So I want everyone to know, all traders take losses, all traders have shitty days, and traders have good days as well. But it's those when you can recover and you can come back, or you can step away from the markets for a couple days. That shows your maturity as a trader, I like to say. And you can always recover, guys. But if you keep compounding the problem, you keep trading when you're losing, you keep getting frustrated. Like I was joking yesterday when I was saying I was going to smash my keyboard and things like that. But traders do smash their keyboards. Like, you do get pissed off when the markets are not going your way. But you have to learn how to control those. Like, losses are part of the game. Just understand it. It comes with this game, okay? But let's get into the daily, because we'll have psychological warfare webinars, but today's not the day for that. Right now, we're going to get into the markets, okay? So what I like to do is learn from my mistakes and try and be better the next day, okay? So a lot of my mistakes this week were, I have been in profitable trades, but I wanted more and I wanted more and I wanted more. And then the trades came back. Some hit break even, some actually hit my stop loss because I didn't even place a break even. So I got to learn from that, So it's just continue learning from your mistakes, okay? Now let's look at gold on the daily, and we're about 1 hour away from Comex market, so we have a lot of time. So we don't need to rush our analysis. We can take our time, but if you're trading gold on the daily, this chart probably looks very, very familiar. Like this is to the point where you don't even need to like start drawing lines anymore. Like you're going to start, if you do this every single day, Monday to Friday, you're going to start to understand that you know the pattern. Like everybody should know who trades gold. All-time high is right there. You should know the date of when it hit the all-time high. It was Tuesday, April 22. It came right up there, 3,500. And this is another psychological game the market plays, these psychological numbers. Like when I was talking about gold is bouncing off of 3290. Because if you draw a line and you look in the past, it's traded and bounced off of 3290 a lot. So it's a psychological point of interest where the auction likes to trade. Okay, so when we hit that all-time high, what I look at is the bodies of volume from there. So this body and this body right there. So this is where I start my zone right there. And if you've been joining us for the past few weeks, that's what I call the area of supply. So what I do is I stretch it into the future. And then there you can clearly see when the market hit that all-time high, it pushed down right here and it bounced right back up. It pivoted right back up right into this zone again, and then that's what we call a double top. 2 times it came up there and then it closed below, and look at the retest, how it came in there, got rejected out, and then we started this second leg coming down. And so now what I do with that is I'm looking for the third top, like a triple top. You see how close it came right over here last Friday and the start of this week, but we technically have not traded in the red zone yet. So we'll stretch that into the future, okay? That's what I mean by a static zone, stretching it into the future. And the only thing that moves is the volume. So if the volume is variable, if it gets up there next week, next month, next year, maybe it will revisit this red zone. And when it interacts or engages in this zone, it's got a high probability it will get rejected back down, just like it did here, just like it did here. Unless the depth of market below us is building and making these higher highs and building like staircases. It's going up slowly and building. Then when it gets up here, as it's been building and creating higher highs and higher lows, then maybe it will break this area and then create a new all-time high. Okay, so far this is, some traders call this resistance, some traders call it supply. Okay, just or just whatever you call it, just understand that there was sellers here, there was sellers here, and there could be sellers again when we revisit this. Okay, so that's key. That's key. And then stretch it into the future. And then you don't have to do this every single day like I do. Like once you do this, if you come trading tomorrow and you don't delete this, that zone will still be there and you don't have to keep doing it. Okay. And then you can just look at the inside daily candles and get some points of interest. I do this for you guys because I know that every single time we come on here, there's a new trader. So I don't want them to be lost, but it does help, but it gets kind of repetitive. So when you know what you're looking for, it's going to become second nature. It's like when I was saying you go to work and you just hit a few buttons with your eyes closed. It's going to become part of your daily routine, and you're going to know exactly what you're looking for, okay? And then the next one is this bullish flag right here, where it flagged, and then it created that move to the all-time high, but then so now what I look at is that bullish flag, you stretch it into the future, then you see multiple days, it came right back, traded in that green box, and then that's what started that next leg coming back up. So with this same zone, you stretch it into the future. Then I can see right here on May 14, they actually closed it below. So then that's when I flipped the zone red, and it opened bearish ignited and dropped right to there. And it traded into 50% of this body and this point of interest. You see where there's a body, a wick, 50% there. So that traded right where the buyers were holding support right there. Then it came right back up and look at where it closed. Again, right above the zone. Next day again, it came down bearish, made a higher low. It didn't close down there. It closed right there. And that was on a Friday. So that's why Fridays are very important to watch daily candles where they close. And then you can see over the weekend there could be news. And then look at how the Monday of the following week opened, ignited, and came right back up and closed. So this is what I also call barcoding, where you have a bearish candle, you have a bullish candle, you have a bearish candle, you have a bullish candle. So the market right here is accumulating. Like here it's trending down. You can see lower lows, lower highs, lower lows. Here it's trending up, making higher highs, higher lows, higher highs. That's a trending market. But you will also see markets when they trade sideways. So all candlesticks have the same characteristics. So this is just on the daily. So here you see almost 1 week of trading of consolidation. Bearish, bullish, bearish, bullish, and then it continued to move. So when this is happening, this could be on an hourly, this could be on 15 minutes. These could be 15-minute candles, a bearish 15-minute candle, a bullish 15, bearish 15, bullish 15. That's approximately 1 hour, and then they decide to release that volume. They will redistribute it after an accumulation period. So just always understand that if you do spot this, even on 5 minutes or 1 minute candles, whatever you trade, the market is accumulating. Sellers are selling and buyers are buying. Eventually, if you wait patiently, they will redistribute this volume. It's not going to just trade here forever, okay? So that's what keeps me disciplined, is always telling myself that if I spot this consolidation, it's probably not the best time to be trading. It's the best time to be analyzing, speculating. That's another word I like to use in situations like this. If you're speculating, for example, if you think the market is going to sell, speculate. Go with a small trade and speculate until you get your confirmations. Then you can go in when they start redistributing the volume. That will help avoid you getting frustrated trading this, because this could be frustrating. Sellers are getting frustrated, buyers again. We had this a lot this week. So this can help you stay calm in the markets when you spot this type of trading. And then you can see that the buyers won here. They kind of consolidated it, and then they continued to push it back up. So if we stretch that zone again into the future, look at today. Today's lowest point almost came right into that green box. It has not technically came in there yet, but almost did. And look at the candle flip into a daily hammer candle right now. So that's our second most bullish candle next to a bullish engulfing candle, because it was really bearish and now it's flipped to the upside. So now we'll see, is gold going to be bullish for the rest of the day? Okay, so just now following all of these, you do have now points of interest where the daily candles were trading inside of this red box and inside of this green box, like all in here. So some key points of interest, what I look for are bodies of contact, or wicks. So here I see a body, a body, a body, a body, a wick right there, another body, multiple wicks, and then I get yesterday's close and I get today's open. So somewhere around here, we have to acknowledge this area. I do it by drawing a line, just like that, okay? And the line color means something to me. So yellow means it's a daily point of interest. So if I go down to the 1 minute and 1 minute candles are trading right or touching this yellow line, I know that it's a daily point of interest. Okay, so it holds more weight. I place more emphasis on the higher time frames, even when I'm trading on 1 minute, 3 minute, or 5 minutes, because these have held for multiple days. The market has reacted here on a higher time frame. So you can see here on the daily. And look at then where it's located. This big bullish candle, it's approximately 50% of it. Look at the next day's pullback where it came bearish, right into that little pocket right there, 50%, and the buyers were waiting to push it back up. And then look at the response on the next day. It opened ignited bullish with that momentum. That's what we call a 3-bar play. It's almost exactly like this bullish flag pattern. That's an inside bullish flag pattern and continue to drive to the all-time high. So this is a pattern. If you spot this, this can help you as a scalper, because these could be 5-minute candles where a big 5-minute candle comes up, and then you find the midpoint of that 5-minute bullish candle. The next 5-minute candle opens, comes down bearish, retests here, comes back up, closes here, and your next 5-minute candle opens bullish ignited. And as soon as it's breaking, that might be an opportunity to buy the continuation. If you do this on a 5-minute, if you, let's say, for example, you buy here or you buy here, place your stop loss traditionally below this low because it's already been tested and it's showing that the buyers stepped in. So your stop loss traditionally wants to be just right below that. If you place it right there, it's really tight, okay? Because one pullback right back down there, you could get stopped out, and then maybe it's like a double bottom there, and then the buyers step in, and then it goes back up. So this is all to do with your risk and what you're looking for. If that's too tight for you, then where's the next logical place to place it? Below this bullish ignited candle that started the big move. And then you're also inside this demand zone. That would be more of a proper area to place stop loss, but then you have to understand that you're risking more to place. So that's where you decrease your lot size to make up for that difference, okay? You can still use the same mathematics. If you're placing a larger stop loss, then just decrease your lot size. You're still risking, like, for example, $100. Like, for example, if I was risking $100 on that trade and placing my stop loss very tight, but I want to give it more room to breathe and I still want to risk that same $100, then I just divide my lot size in half, and now I'm reducing my lot size, but I'm still risking the $100, but I'm giving it more room to breathe. Okay. So if I didn't tell you guys these were daily candles, these could be 5-minute candles, and same situation. Okay. So that's the beauty of once you learn about price action, then you decide the momentum of the speed of you want to trade. Okay. If you're a swing trader, stop looking at 5-minute candles. I had a one-on-one with a gentleman right after yesterday's call, and he does intraday trading and swing trading, but he's looking at the 5 minutes and the 1 minutes and throwing them off. And I told him, come up here and eliminate 1 minute, eliminate the 3 minute, eliminate the 5 minute, eliminate the 15 minute. So now what he does is he does his analysis on the daily, and he does 2 hour, and he only executes on the 30 minute because he was paying too much attention on the 5 minutes and it was throwing him off. And I'm like, if you're a swing trader, why are you even looking at these little time frame candles? They're irrelevant. Don't even look at these things. So now we're going to see how he's going to trade for the next coming weeks by looking at the higher time frames and just focusing on those. Hopefully that will change up the game for him. So just little tweaks, little things like that that you can fix. Can really help you as a trader. Okay, so you see here now, like kind of like back testing. When it came back down here, I see impulsively broke. Candles do impulsively break. That's the game. That's very difficult to learn. But if you wait for a candle to close, then you get more confirmation. So this is the hardest part of trading, is just waiting for a candle body to close. Because the market presents us all these impulse moves. Why does it do that? Why is there impulse moves? Because traders are very impulsive. So, you know, and there's fake outs. Those are fake outs in the markets and things like that. When it was coming down there, the sellers were selling, thinking it's going to continue to go down, but then they came back up, they closed in, look at the next bar, how it opened bullish, ignited, and continue to go up. And that's coming after their stop losses. So markets do this. That's how they accumulate more and more and more volume. Okay, so there's a body that closed there, body that opened. I can see another body that closed, another body that opened. And then a big bullish candle, again, cutting it in half, 50%, same line. And then again, you see how it retests. This bearish candle, approximately 50% of it is still that yellow line. And then you see when the market comes right back up, look at where it closes, right at that yellow line. Close, open, retest, 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 close, open. So this is a critical point of interest. And see the number, 3,288. So I'm $2 away from that psychological 290 area. That's what I was talking about. If you want to kind of now just adjust it with more of the recent volume, I got a body and a wick there. Bring the yellow line just right there. Okay. Now it's 286. Okay. We still have the area, the point of interest, give or take 20 pips. But now I can see where it closed yesterday. Now I can see where it opened yesterday. So just following the close of yesterday and the open. When we opened today on gold, it was very bearish. This was a bearish ignited candle that opened right here at 3286, and it was bearish. We took out yesterday's low of 3275. Again, look at these psychological numbers. You know, it's an auction. So a lot of transactions occur at these critical psychological numbers. Gold likes to move on these $25 increments. So 3200, 3225, 3250, 3275, 3300, 3325, 3350, and so on and so forth. And then when we came down there, did we get a wick? Was there, I always ask myself, was there a tweezer bottom low, equal low? Was there? No. You see how the sellers had pushed it even further down, further down, further down. So when we're coming down now, I look for another point of interest. Where is there, like, where can I see some touches? What can I look at? If I was looking at this big bullish candle, if I was looking around, just guessing where 50% is, 50% is probably right there, half of it. Right there. If you don't want to guess, another hack, what I do is I get my Fibonacci tool really quickly and I just measure from the opening and the closing of that body. See the 0.5? See, I guessed exactly 0.5 because I do this on the 1 minutes, guessing the 1 minutes, because I don't have time on the 1 minutes because they open so fast to have the Fibonacci tool on all these candles. So just repetitive action, you're going to know exactly what you're looking for. And then another thing that I taught myself was, if it doesn't hit exactly the 50%, I got to give myself a little zone. So what I do is, using the Fibonacci tool, the one line above, the standard deviation above, the standard deviation below, there's your zone. I call it the hamburger meat in your hamburger. You got the bun above you and the bun below you, but there's the meat of that hamburger right there. That's the meat of that candle. So now you're giving yourself a zone. And that is where the market is. It's like a magnet. It's point of control wants to come in there, and then we figure out what happens when it gets in there. Okay. Once you have that zone identified, again, just stretch it into the future because it may revisit this zone tomorrow, next week. This zone might become inverted. Then you can understand that if the sellers close below here, you invert this zone, static, just change the color red. Buyers might be buying into it, and then sellers push it right back down. Okay, so now I can see today gold came right through and cut through this zone right there, and that's our lowest point of the day right there. So I draw a purple line from my lowest point of the day, and I look back now. This is where I always back test. See the lowest point of the day? If we go backwards, 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 look at how it used to be, these two tweezer top highs exactly at 32.45. This bullish candle came, that was the highest point, got rejected. Next day it opened again, it tapped right into that purple line and went back down. Now we broke above it. So when you have volume above it, this is now a supporting area. And you see gold came all the way down, all the way down. We didn't tap into the bigger green zone down in here, but this is now a higher low above this zone. So the depth of market is getting stronger below us. Okay, so the buyers brought it all the way right back up today to the opening position, and they flipped the candle bullish, where now the volume is engulfing yesterday's bearish volume. Currently, we still have 9 hours plus to go. So I don't know where this will close, but right now, this is a bullish candle, very bullish. We also have now the highest point identified, 3,304 or 5. I hit the highest point, and then it's getting a little bit of a retracement. So another hack that I do is the current volume, I cut that in half because I want to get the point of control of the current volume. So just cutting it in half right there, that's me cutting it in half. If I get my Fibonacci tool and be exact with where it is, remember this is a fluctuating candle, so it is moving. So it's very hard to be exact right now because it hasn't closed. But from where the volume opened to where it is right now, see, I was very, very close to the 0.5. There's the 0.5. So 3,293. If it pulls back there, that might be an opportunity for us to buy a pullback. You could also draw a zone if you like, a little bit above, a little bit below, and stretch that across so you get your zone, okay? But when it's kind of small body like this, then you have another zone in here. Um, it could get a little bit busy on your charts. Okay, so if we pull back to here, 32.93, that's maybe the point of control of this current volume, and maybe it comes all the way back down here, and buyers are stepping in and pushing it right back up. If we lose this yellow line, then the sellers have majority control of the volume and could maybe push this, absorb this blue volume, come back to the opening price, then flip the candle back bearish, and then we're coming down to test right here. And then if it continues, we're going to test the top of the green box. If the sellers continue, we're going to test the middle of the green box and just continue to go down this grid pattern, right? But now if the candle flips bullish again at the highest point and we drive, where could we drive? Are we going to drive all the way back up to this all-time high supply box up here? By the time we get, we are not going to just go directly right there unless maybe there's some significant news in the market and it's driving, but we have these points of interest here. Before we get up here, we got to talk about getting up here first. So if we break today and we continue to go, we could come up right here. It depends on your time frame that you trade. You know, if I'm a daily trader, I'm not looking just for this small move. I'm looking to fill the bigger part of the candle. But if I'm a 5-minute trader, right here, this is a good area to maybe recognize. Right there, you got a body and a body from 305 to 315. $10 move on gold from the purple to the yellow line is 100 pips. That's perfect. That might be our daily goal for the day, just to fill from here to here. If it continues to go, there's right there yesterday's highest point. Maybe it wants to test yesterday's fresh high right there, 3,325. Those $25 increments that I was just talking earlier. And then I can see that wick, it's equal with that wick. I can see, look at right there, a retest right there, that yellow line. There's a wick right there. There's some bodies right there. So that's a critical point of interest. And it's not just 325. What else is it? Maybe you guys can answer the question while I'm going along. It's representing approximately 50% of that big bearish candle. There was the opening, there was the close, somewhere right around here is that 50%. So that's where it's like a magnet for volume to go to. Okay, if it continues to go up, body and a body, 3,300 and what is it, 42 or 43 right up there. And I can go up there again. I can do this. I could do this all day for an hour and do my charting. And then the good thing about this is once you have these, you don't have to keep doing this every single day. You can leave this how it is and just start trading the volume tomorrow and the next day and next week. These are just points of interest, okay? So sorry guys, I apologize. I've been spending so much time on this, but it's good review for everybody. So now when I ask you guys, how is today's daily candle? It is a bullish hammer and could continue to drive. If we start shorting this thing, remember you're shorting a hammer candle. So it's already came down and the buyer said we're bringing it right back up. So it's at its highest point right now. Yes, it could continue to come down, but it could continue to break with momentum going into Comex as well, or maybe Comex will bring this thing down. Okay, so it's very strong. It's making higher lows off the bottom. It's supporting this move, and we could continue to drive. So now what I do is I dissect this daily candle. I go into the hourly. Now I want to see more of the bigger hourly moves. What time did they happen at? So I can see, like right here, this is where it broke. Here was support. It came back up, and then it came down, and right there it broke. What time was it? This candle is the futures market opened just right prior. Okay, so that's 7 p.m. There's futures, 8 p.m. So that's when we kind of found the bottom. The bottom was 9 p.m. Eastern right there. And we slowly have been coming up. Where? See that big, okay, so this is where I'm going to show you that that 50% rule works on all time frames. Okay, see how I did it on the daily? What about this? This is a big hourly bearish candle. 50% of it is right around here. So you see how the market came right back up to 50% and started to struggle and consolidate. There's the barcoding. Bullish, bearish, bullish, bearish. And then it started with another bullish ignited candle. At what time? 3 a.m. Eastern is London market. This is not just any open. This is London now. This is the European. This is the British markets opening up. And it supported the move. Look at below it. Higher low, higher low, higher low. And broke right above it. And look at where it closed. Right at that. Almost engulfed it entirely. And then we had 4 a.m., 5 a.m., a pullback where? To these daily yellow lines, these points of interest continue to come up. And then we had another bullish big move, 6 a.m. This is now the New York pre-markets opening up. And since then, we've been continuing. So if I look for 50% of this big bullish 6 a.m. candle, it's somewhere right around there, 32.89, 32.90. That's that critical level that I'm talking about. And right now we're trading right at the highest point of the day, but we still have some resistance behind us. So we'll see if we can continue to push up here. Any pullbacks now, where would be a good area to look for buys? So this is where I kind of draw another zone right here. Okay, so I look right there. When the market came down here, it stopped and went back up. If I go backwards, so if I back test this zone, I can look backwards. I can see right there where it also came back in, retested it, and went back up. So I can see that was an impulse, 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 no volume close below there. That was an impulse, no. So stretch this zone into the future. There's where it was resistance and push down. Now I bring it across, see again resistance, but now that body at 6 a.m. that closed above, now if we get pullbacks, if I'm an hourly trader, place this signal right here. Hourly traders, listen to what I'm saying. Right click on this 3280, this yellow line, 3285, right click it, add an alert. Okay, so I've alerted myself now if there's any pullbacks coming back down. So if gold comes back at some point today, right there, I will get alerted and I would possibly look to buy out of there and take it back up here and it may be higher. That would be a good opportunity to look for a good solid pullback buy. Okay, so that's how you identify, and you wait patiently for it, and that's why and then you won't be rushing trades. Okay, but it could also pull back to right here and get a higher low and go up. Okay, so each one of these are points of interest. But I place more emphasis on this one because I can see, look at how many times the hourly candles came in here, back up, came in here, back up, came in, back up, came in, back up. So if it comes back in, maybe back up, just saying the same shit over and over. Now, very bullish on the hourly. Okay, so let's go into the 5 minutes and look at the 5 minutes. Okay, so they are a thing of beauty too. When they're trending, when we're trading in a choppy, like when it's trading like this, they're ugly, very difficult to trade. That's what we've been getting a lot this week. But when they're redistributing the volume, look how beautiful it is. It continues to go up, pullbacks right here, we can buy. Continue to make new highs, pullbacks right here, we can look to buy. Continue to move up, pullbacks are continuing to go high. Okay, so now you can see this RSI divergence. Okay, it's continuing to make highs, and and then look at the strength is going down. So this is telling us an indication, a signal to sell the market. Okay, but sometimes when I look back, like these were sellers here, and then it came back up. These were sellers here, and it came back up. These were sellers here, and it went back up. This might be sellers here, and it could go back up. Okay, so when you are counter trading, if you're selling, we're counter trading. That's when we have to use a pip and dip strategy. You got to get in and out, because you always have to keep in mind you could be selling where buyers are patiently waiting to buy the pullbacks and continue drive. If you don't feel comfortable selling, then don't sell when the market is moving in a bullish trend. Look to buy the pullbacks. You might find that you might have better trading by not counter trading and just waiting patiently to buy pullbacks. That's it. When the market is trending, that's where you can make a lot of good trades. When we get a trending market, when we get a sideways choppy market, it's frustrating. It's difficult to trade. That's why I say, guys, use smaller trades when it's ranging, because you'll get frustrated, you'll get pissed off, you're going to end up doing some silly things. You're gonna revenge trade, and before you know it, you've blown up your days allotted like 1%, and then you come back later on and the market now is trending, and you're like, oh man. So it helps to just trade with the trend. Okay, so the 5 minutes, they also have bullish candles, 50%, half of it is right there, catching a pullback and continuing to go. So is there zones on the 5 minutes? Look at this where it was like kind of consolidating all in there. Look how choppy that was, like this. And this is for like 1 hour. That's 10 minutes, 20 minutes, 30 minutes, 40 minutes, 50 minutes, 60 minutes. That's 1 hour of a bull flag. That sellers tried to push it down, but it came back up. Sellers tried, went back up. Sellers tried, and then it went back up. So this zone right there, you see, we might trade right back in here, and then again, we might consolidate in here. And then maybe we'll come back up to the, look at that purple line, that's the highest point of the day. So that is our resistance up there. We'll see if they break it down and can come down here, but maybe this yellow line might be where it kind of impulsively breaks, catches a wick, and goes back up. But ultimately, if it comes down in our green box here, this is where we could look to buy a pullback on gold. So let's just continue to watch this, how it's moving. It could be maybe like this, a head and shoulder pattern, left shoulder. This is the head that broke out at the highest point of the day. Could come back in here, trade in here, right shoulder. Maybe it does come down to here, maybe ultimately down to here. And then this might be the opportunity to buy it back up, bring it here, close back. We'll retest this zone, and then we might be breaking for a new daily high and going up to 33.10 or 33.15. Okay, so that could be a possible pattern, like a GPS where it shows us where we could go. That could be very possible that could happen. Okay, some traders also add now, once they've done their analysis, they add indicators. So a 9 EMA, where's my 9 EMA? There's my 9 EMA, this green line. Okay, so it was above the 9 EMA. It's very difficult to short when we're above. Right there kind of broke the 9 EMA, but came back up. Maybe this candle will break below it, but if you add a higher time frame one, your 200 EMA, there's your 200. So that's what I was saying. If the market comes down into the green box, our 200 EMA will probably be in there too, and then that's where we could get a good bounce and come back up. Okay. Another indicator that we use is our SST daily bar indicator right here. We've kind of made our own unique one here, that we also have a Fibonacci retracement. So if you go to the settings, like right here, I haven't kind of configured it all yet, but here's your Fib retracements. So I've turned off the 0, the 236, the 382. You can see the orange line right here is the 0.5, that psychological. And this is the entire range of the candle. So normally when I'm placing the Fib, I go from the opening to the, this is the entire range from the lowest point to the highest point. So you know exactly where 50% of the daily volume is. So this is kind of like a VWAP, like a volume weighted average, kind of you know exactly where 50% is. I've turned off all the other ones, but if you want to turn them on, you're more than welcome to do that. Okay, so this is this orange line right here. See how it's kind of meeting up with this 32.75. So if the market was ever to come down here, that would be a really good opportunity to buy there. This will maybe come up as well, and we'll see. But what it is representing is, I know that half of today's daily price is 32.75. So starting from the lowest point, 32.45, to the highest point, 33.05. If you add those numbers up and you divide them by 2, you'll get 32.75. Okay. So that's what that orange line is. And I know it's a lot of lines. I don't normally trade with all of these indicators and things like that. But for you guys, the 9 EMA is this green one, the 200 is this purple one, and then this is the SST indicator of the entire daily candle. So you can see how we opened. We were very bearish. We came to the lowest point of the day. We came all the way back up, and there's the highest point of the day. Okay, and this is the volume that is left inside this candle. Okay, so that's why a good pullback buy would be right back where the candle opened, right back in this green zone. If it does pull back on us, if it does come in there. Okay, so we'll leave gold right over here. It is 8 a.m. now. Okay, so there's gold. It's still kind of consolidating. So what I'm going to do now is, I took my time, my sweet ass time, I think 30 minutes on that, to explain to you how a top-down analysis is done, the way how I do it. Okay, so I'm going to do the same thing with US 30 now. I'll get this done in maybe 5 minutes. Okay, I'll speed up and I'll do a lot faster without explaining every single line. We'll explain them, but I'll go faster. Okay, and then I'll have both of these charts done, and then we'll get ready for Comex in 20 minutes. Okay, so if you guys are trading or watching gold, just remember it's 8 a.m. Right now, so you have a new hourly candle starting in the market. So again, we'll pay attention to that. With US 30, this is now Dow Jones. Okay, so normally we have NASDAQ in here. I'm going to save NASDAQ more for Wall Street. We'll get that done at 9. Okay, let me just drink some coffee here. I got a coffee and a Monster Energy drink. So we're going to need some energy, guys. Now, this is Dow Jones on the 5 minutes. We're not concerned about the 5 minutes right now, but what we can see is an unusual pump, like right through here. What time did this all start? 6:35, 6:30. Like, look at that big move, and it's kind of retracing all the way back down that entire move. Okay, so what goes up can come down, just like that. You know, when we get into a trade and we go up 30, 50 pips, if we don't do anything, it could just come right back down. You're seeing this move. It went all the way back up, and it's coming all the way back down. Okay, so we might be getting at a good opportunity where it pulls back, and we could be buying a good move on US 30. So that's why we got to now figure out our zones, our points of interest. So let's start off with the daily, and I'm going to go a little bit faster now. Okay, so this is the daily. Number one, we should all recognize this area. It was trading in there and stopped trading in there, right there and right there. That also is an all-time high supply. That was the all-time high, 45,000 of Dow. Again, if you stretch into the future, you see it came down and it came right back in. Traded in here again and then went back down. So let's stretch this into the future. We're not too far away from coming back up here, but you can see they've lowered the offers right here. It's very, very visual right there. See how it started right here, came in, and boom, right back down. Again, bullish candle right in there, and that's when they had that big drop. So if you stretch this into the future, again, you can see we came right into it. You can see the actual date of exactly when it was in here. We came in, and look at today. We came in there today. That's the highest point in the red box, and now this is an inverted hammer candle. We saw gold was a bullish hammer. This is an inverted hammer candle. It looks like a hammer candle upside down. We could lose this daily volume and turn into a shooting star, and we could be pushing down. However, if it keeps building right here, we could come back up. So watch, this is at a critical moment in the markets. Okay, so you see how that is structured. You see how now the offers have been lowered to right here. We have not closed with any bullish volume above here to come up. If we do close, for example, just real quick, if it comes up here and closes and retests this and we drive, where are we going to drive all the way up to there? Look at what's trading inside right there. You see this? There was a consolidated period right here. So this would be a point of interest right there. See where half of that bearish candle right there, half. Look at retested, back down, retested the line, back down, impulse, back down, impulse, back down, closed right at the line. It did break impulse, but you see, that's like when I'm scalping. When I'm taking a scalp, like if this was a 5-minute trade, I'm targeting the red box. Yeah, that's the bigger move, but history is telling me that there's a lot of rejections right here. So that's where I got to measure that move and maybe trade right to there and grab my money and get out of the market, because it could just come right there again to the yellow line and right back down, just like it did right here. Okay, so that's a point of interest. Okay, that's above us. We're not there yet, but just teaching you guys what to look for. Okay, do we have another point of interest below us? Yes, look at the pivot points. See when it came all the way down, the market just stopped right there. It stopped going down, and that's where it pivoted right back up. Okay, so we've got a point of interest right now, and then look at how it's support there, the body closed right below, and look at how it's resistance now. How did it stop this big bullish candle exactly right at that yellow line? That's when I was asking myself questions when I was learning how to do this. How did that wick stop exactly right at that yellow line? How did that one stop right there? It's not just by chance. And then I started to backtest this, and I started to learn that the markets react at these levels all the time. Okay, I could keep doing zones below here, but again, I want to do this one faster. I don't want to waste time. I don't think that US 30 is going to drop all the way down here today, so it's irrelevant to do all of that. What we got to do is focus more on these points of interest, okay? First thing, do I see a big bullish candle right here? And I'm going to cut it in half, okay? That song by OT Genesis and featuring Young Dolph, cut it. The price is getting too high. We need to cut it, okay? So we cut it and look at the pullback. And 1 day, 2 days, 3 days, pullback. Came right in there and boom, 1 day, 2 days, 3 days, we're in profit. That's our weekly goal, okay? These are daily candles. This is not 30 pips. This is maybe 500, 600, 700, maybe 1,000 pips. And then when it comes into the red zone, it comes all the way back down. Trades right at that. We broke, came down, but again, higher low, bringing it right back up. Bullish candle. Look at the days when they do this. Friday, they came, grabbed liquidity, gapped it up Monday, start of the week, closed it above. Retesting, coming down, holding 50%. So you see that where we cut that candle in half? See how it's now a body close, a body open, and it's representing 50% of that bullish candle on May 26 and still holding. So now let's follow the yesterday and today's volume. Yesterday was a bearish day. We came down, we closed right here. So points of interest now. Where did we close yesterday? Where did we open today? Right there. Okay, 42,122. Is there a low wick? Yes. So when we opened, it was initially bearish. We came down. It made a low of the day. Purple line. Now I look at the purple line. It's higher than yesterday. It's higher than Tuesday. Monday, the start of the week, was a bullish gapped up ignited candle. So it is building the depth of market below us, okay? If you want to draw yourself a little green zone, right, you can do it right now. Yellow line and the purple line right there. There's your green box, okay? Right there. You got now your zone. Stretch it into the future, okay? So what happened now when we came in here? This was a bullish candle. I showed you at 6:30 prior to futures market opening up. Maybe after NVIDIA's news in the aftermarket, and also not just with NVIDIA. US 30 doesn't really care about NVIDIA. Trump, remember, or the court ruling against Trump for the tariffs, that's positive news. I think it was released at that time in the aftermarkets, and that's when the markets, they loved it. Anytime there's no tariffs, the markets love that, okay? But now that news was released, and now it's buy the rumor, sell the news. So it came all the way up, all the way up. This is a point of interest right here. Those bodies, let's place a yellow line right here. Sorry guys, I said I was going to do this fast, but there's just so much to talk about. As we came up there, you see, it broke, and then right there, the top of the red box, it went right in there. Look at the highest point. It's 50% of the red box. Like technically it's 50% right in the middle of the red box. And look at 50% of that bearish candle right there. They rejected it back down. Now it's all the sellers bringing it back down. What happened when it came right here? There was no support there. What happened when it came to this yellow line? Where were the buyers there? They weren't there. Sellers are in full control, pushing it right back down. We are almost at the opening position. So this is the only bullish volume that's left in this candle. So now looking back yesterday, you see that bearish candle? Can we figure out where 50% of yesterday's candle is? There it is, 50% of it, okay? So what we can do now is if we trade right back up to there, that could be where the buyers and sellers have a dogfight right here at this point, 42,270, to see if the buyers can continue to bring it back up or the sellers will bring it back down. We are literally almost barcoding where it's bullish, it was bearish, it was bullish, and now we're coming back down bearish. If we lose all this volume and we break, this is where the market could drop. And then if it drops kind of like in Wall Street, if it's a bearish candle, bearish candle, bearish candle coming down, right there, points of interest, 41,925. You see how 925, 950, 975 works with any instrument? It's psychological. Look at that one, 41,825. Like this is not just by chance, guys. This is how the markets operate. It's all engineering moves. Okay, so we have now our daily candle. Would you guys say it's bullish, bearish, it's going to be mixed reactions, okay? So what we do is now on the hourly, go into the hourly, and let's figure out, okay? So that big pump, what I was just talking about, started at 6 p.m. Eastern, 7 p.m. There's the futures market. It came up. What time did we make the high of the day? It was 11 p.m. Eastern. We retested it at 1 a.m. You can see tweezer top highs, and then they started to bring it down. Bearish engulfing candle, push down. If we're grabbing 50% of that bearish candle right there, half of it, continue half of it, continue half of it, still pushing down. So is there any maybe hourly areas right here? You see how the hourly candle stopped right there, the impulse rejected right there, the body's right there and right there. If I was to draw an hourly red zone, it would be right here in the market, right there, and that would be resistance in the market right now. So if the buyers come back up, they're going to trade right in this red box, and the sellers might be there to push it right back down. If they can close above here, we flip that box green, and then we could maybe retrace back up to here, maybe back up to the highest point of the day. But this is where there's going to be a big fight right here. And look at the psychological number, 42,400 right there. You can stretch that across. This looks like a huge head and shoulder pattern on the hourly. This entire zone is our left shoulder. There's our inverted head. We're right back trading into our right shoulder right here. So this is where it could come down, back up, play games in here, consolidate, and then ultimately maybe breaks down here. We close below this. That turns to a big red zone, and look at, then they drop the market down. Okay. However, we could be coming down to this green box, and maybe we could be looking to buy out of here and take it back up. Okay. So you see how it's coming down right now? They're just single hourly candles just falling. Okay. So that's a falling knife. That's a huge, if you look at a 4-hour candle, I guarantee you it's a massive bearish 4-hour candle. Yeah. Look at it. Okay, so do we want to buy this right now? Maybe we wait for it to come into this green zone, and we wait where the buyers are, and we determine whether this is a good opportunity to buy. However, it could cut right through here and break and continue dropping. Look at the 4-hour candles. Okay, there's, when we're talking about 1 minute, 5-minute candles, that one closed right near the low with no wick. Look at how it opened and it just popped. There's your firecracker. 4-hour traders, right there. Like if we saw that, acknowledge that candle right there is almost 300 pips. Like you could be done. That's it for the week. When the markets are moving, they're really moving. Okay, so looking on the 5 minutes, like look at the buyers. The buyers are getting stuck trying to buy this. There they tried to buy, they brought it right back down. Here they tried to buy the bounce, back down. Here they tried to buy. Here they tried to buy, but it's lower highs, continuing to drop, So maybe, look at, holy shit, it's retraced that entire tariff news. And it's coming all the way right back down, okay? So that's a big bearish move coming down. 5 minutes, I'm a scalper. Probably you guys are too. Is there a 5-minute zone just like I looked at that hourly? Right here. I see the 5-minute candles come up to that daily point of interest, back down. Let's stretch this across. Right there started that big move, okay? And if I continue with this zone coming across, right there, I see that they tried impulsively. So as a 5-minute buyer, I want to see, will the buyers close above here, retest this? Then I know it could be at the daily point of interest. This could be turning to support. Then I could take that 5-minute scalp to fill to those bodies and ultimately maybe back up to that red box. Then when it gets up there, I got to do something because it could come right back up there and then come right back down. Okay, so that's one area I'm going to be watching this entire morning, see if the buyers can close it above here. And I'm also looking to see if it comes all the way down here, maybe to buy down here in the green box, where it's finished off this entire retracement. And that might be a good, if you wanted to buy the highest point of the day, you're getting a massive discount coming back down here. That might be a good opportunity to buy. Okay, so that's right now how US 30 is moving. If we add our indicators, 9 EMA, we are well below the 9 EMA. You see, we don't even have like a body close. That was a body that closed above, but it was a quick fake out. Okay, so we're still retesting it back down. So again, the 9 EMA is positioned right above that zone. So I want confirmation that blue volume can close above there before I consider buying. If I start buying now, there are small speculating trades because I can see buyers in the market have been trying and they're getting smashed down. So I don't want to go in with a full trading size when I can go in small, feel it out. If they keep pushing it down, I can easily close it, lose a couple dollars, but not really affect my psychology for the day and not revenge trade or not get pissed off. There was the death cross where the 9 crossed below the 200, pushing this thing down. We add our daily bar right here, and there's our daily bar. Okay, so that is, in a nutshell, what we got going on. It is 8:15, 5 minutes prior to Comex. Okay, so you guys trade which security you feel comfortable trading, either US 30 or gold. So look at gold on the 5 minutes. It pulled back right into this zone and continued to go right back up to the highest point of the day. So look at how they've pushed gold to the high of the day, and 5 minutes Comex is opening up. So will it continue to drive through here, or will they bring it down and then go back up? But let's watch. Okay, so one other thing what I always do to remind myself is sorry guys, I'm just getting a text right now. What I always do is I go into my platform, my trading platform, and I make sure which security I'm trading, either US 30 or gold. I look at my lot size because I was trading yesterday, maybe a different security, different lot sizing, contract sizing. Don't make any silly mistakes. Like if you want to go in a feeler trade and you actually have your regular, you don't want any mistakes. So this is where we eliminate mental mistakes. This is part of our checklist we do every morning. It should become automatic with you. So if I'm choosing to trade gold, I look at my spreads right now. I see, I adjust everything to the size that I want to utilize when I if I look for a first trade, all of these things. I don't want to make a rookie mistake. I don't want to make a silly mistake now. I don't want to make a costly error. So this is the time to fix everything. Okay, are we all good? I know that was a lot of analysis, not particular maybe what you guys wanted. Maybe you guys just wanted to watch the candles move. But I'll tell you one thing. When you have a good solid analysis, you just trade off of these zones and let the volume come to you. I promise you that will take care of a lot of your trading, your indecisions, your impulse trading. We'll teach you how to be patient. We'll teach you how to be disciplined. It's up to you. This is what I found that helped me when I was struggling as a trader, because I didn't do this. I was just trading with these indicators. I was trading with RSI. I was trading with these EMAs. These are lagging indicators. I'm always behind using these things and getting faked out of the market. And then I'm like, okay, why don't I just start from the highest time frame, see what's going on, bring it down, see what's going on, bring it down to the time frame I like, and see what's going on. And then just I back tested this for you guys for multiple years. So these things like to have reactions. And then the other thing is very simple. If the volume comes up and closes above here, then just change that zone to green, because it could pull back and this is now support. And then it could come right up to here. And when it comes up there, it could go down. It could go all the way down, but more than likely, it wants to test 50%. So if I have a big bullish candle or two bullish candles filling this zone, maybe it will pull back into 50% and then make a higher. And then you see it, you got a trending market now. You got a higher high, a higher low, higher high, higher low, and a new higher high. And look at gold going. Okay, so gold is going. Prior to Comex, just pushing right through. Look at our daily candle now, huge. Okay, so there's still this, this RSI divergence where it's continuing to make these highs, but also what's deceiving about RSI is anytime it's above 70, we're taught to just sell the market. But another thing that a lot of traders don't know about RSI, it's relative strength index. It's not relative sell index. It's called relative strength index. When it goes above 70, 75, 80, 85, up to 100, it's telling us that this is in a strong area, strength, strong. It's flexing its muscles up here. So, sellers are trying to sell, but it's in a strong area where buyers can just continue with that strength, continuing to cut through this resistance. Okay. So I like to call this indicator RSI a really silly indicator. Because it tends to be silly at times. So I don't necessarily look at that indicator. I just observe it, see what's going on, but I don't trade off of that thing. I've been clapped many times where thinking it's a 70 and then I just hit a sell. And and then it's just like these traders. They were selling when it was overbought, and then it went back up. They were selling when it was overbought, and it went back up. They were selling when it was overbought, it went back up. They were selling right there when it was overbought, and it went back up. But there's no break of structure, right? If these sellers closed it below here, now we're having a different conversation. because now they closed it below bullish structure. Then we could start that leg coming down. Okay, it's just like this, how US 30 is falling. I guarantee you where RSI is over. Yeah, look at RSI is all in the red. This is bullish divergence. You see how the price of US 30 keeps going down, but the strength was down here at 13, and now the strength is at 23. So the strength is getting stronger down here in this oversold condition. But why is the price still going down? So this now, if I'm thinking of a buy, RSI has got bullish divergence. I'm waiting for US 30 to drop down into this green box. That might be the best opportunity to buy. Okay. But here we go. Here's Comex market open. Okay. So just by judging, sorry guys, I'm going to zoom in a little bit. I use my cut line now. Can we cut 50% of that bullish candle? Yeah, right there. We can cut it. So if it pulls back, we could maybe potentially be buying this and go back up. If this breaks, we'll see. Okay, so it opened bullish ignited. It still wants to go. It's bullish ignited. There was absolutely no pullback. Maybe we can sell when it reaches this yellow line at 3315. Why? Because it's not, I'm not just guessing up there. It's a daily point of interest. It's a yellow line for a specific reason. Okay, guys, if you like that kind of analysis, leave a like on YouTube. We almost have 200 viewers. I want you guys to get to know how to do this. So when we get in these calls, we can go bang, 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 bang. We can do multiple charts, and we can really, start cooking instead of just talking about the same zones every single day. But I know that there's new traders that keep coming on, but they got to continue to learn just like all of us did. There's video after video after video after live after education we have on our website. You're more than welcome to join or watch some videos and learn what we do. We do the same shit every single day. Like nothing changes. It's very repetitive what we do. That's the way how I like to trade. Very repetitive. With a plan, disciplined plan every single day. Some days it works, some days it doesn't, but the consistency is there. I do the same shit every single day. I don't care if it's a Monday. I don't care if it's a Friday. I don't care if we're in May. I don't care if we're in June. I don't care if we're trading London. I don't care if we're trading New York. I don't care if we're trading Tokyo. I don't give a shit. I do the same thing all the time. I don't care what security we're trading. I don't care what time frame we're trading. Do you guys understand what I'm saying? It doesn't matter because it's the same shit over and over and over and over. The only thing is to trade with the market when it's trending or to kind of avoid it when it's ranging. That's it. But I also have rules that I do when it's kind of ranging. Speculating trades, feeler trades. We talked about this, a game of chess. I'm getting better at chess. I almost beat my daughter last night again. I'm getting better, but she still smoked me. So in a game of chess, I'm learning, guys, so I'm new to chess. You move your pawns first, right? You don't move your bigger pieces. You don't move your king. So you move your pawns. So just like in trading, a feeler trade is like moving your pawn. Maybe I want to sell, but I know it's still like right here. Even if I want to attempt to sell up here, I know it's over. I'm not going to go in with a big sell because I can see the market is selling. That's not enough for me to get out of the market. Then they'll come after my stop loss. Again, I could go in with a big sell and then they go after my, now I'm pissed off. Now I'm revenge trading. You know what I mean? That's the psychological warfare these markets play with us. But if I went with a smaller counter trade, just a micro size, yeah, I lost a couple dollars, maybe a price of a coffee. That's okay. That's not enough to get me angry. That's not enough for me to pack it in and be done for the day. I see, okay, I try to sell, it's not working. That's like moving a pawn and you lose a pawn. I still have a lot of other big, strong pieces waiting to go on the chessboard. So look at it. Like, it's still pumping. If you're in buys, congratulations. This is another thing. I'm not in a trade right now. So I don't want to buy the highest point of the candle, especially like it's just not part of the game. I don't FOMO. That's FOMO trading, right? I want to see maybe what will happen. Maybe it will come up. Maybe we see a pullback. Maybe it comes up. Maybe we see a double top. Okay, now second leg could be the stronger one. Maybe it comes back down, closes below structure. Then we start to
trade back, and then we can maybe possibly look to short the market. But just feel out the market, guys. Feel it out, just like sports, like boxing. When you watch boxers, like back in the day, Mike Tyson and Evander Holyfield, when those two get in there, they kind of feel out their footwork, they jab each other, and then Mike Tyson goes in and bites his ear off. That's when he goes in for that big lot size, when he bit his ear off. You guys remember that? That's not part of boxing, to bite someone's ear off, but that's when he was revenge trading. He should have kept jabbing, but he was getting frustrated with Evander Holyfield. He said he headbutted him and all of this, and he lost control. So that's like a trader losing control. Breaking your keyboard is like Mike Tyson biting Evander Holyfield's ear off. He should have just kept jabbing, and he probably would not have done that, but he lost his cool. So as traders, we can lose our cool too. Another big thing, guys, okay? Comex market opens at 8:20 and then 8:30. Then we got multiple folders. So don't forget today, we got our red folders. We have our preliminary GDP red folder coming out in 3 minutes. Unemployment claims, weekly unemployment claims coming out. Our preliminary GDP price index coming out. So volatility is coming in the next 3.5 minutes. So that's where it will affect the US dollar. So just looking at gold, we're already very, very overbought up here. Maybe the news will correlate with gold coming down. Okay, it could, or a fake out. Okay, just remember what they could do. It could come down, kind of cool off the RSI a little bit, and then boom, just come right back up. Okay, so I'm not in a trade. I'm not looking to take a trade 3 minutes prior to red folder news. Hell no. I'll wait it out. Maybe I wait 8:35, maybe 8:40, see how the market reacts. But what I see with US 30 now is we've found a bottom. Okay, so far we got one bottom right here. So it came down, we're pivoting back up. So now it wants to come and figure out where the neckline is. The big neckline is right up here, but maybe it will be a lower high neckline. Maybe it will come up to like this wick, this body, and then push back down. So what we could look for is maybe a possible double bottom on US 30. So what I do is I kind of draw a green zone to illustrate that we might have a bottom already but we had the same thing here where it bottomed and came up, but then they came right back down. So that's why I want to see maybe a second bottom will hold and come up. And then we're right above that key daily point of interest in this big area. So maybe they're starting to build something. Okay, so let's let it build. Let's let it do its thing. Again, if you're looking to trade, speculate. We don't have the confirmed second bottom in the market yet. Yeah, Efren. Yeah, we got the news coming up right now in 2 minutes. So if you're looking to take a trade, just wait it out. 2 minutes, guys, because the news could be very volatile. It could sweep liquidity. It could like what we could see is, like, for example, the news could be released. It could take out, like right here, take out this low, come back up, close above here, and then boom, comes back up. Okay. But let's wait for it. If you're not in a trade, wait for it. And if you're in a trade, just I hope you're not over risking or doing anything silly. It's not huge news. It's not like NFP or FOMC, but it is still, we respect red folders. Okay, so gold, okay, coming down. Remember 50% of that bullish candle. And then this purple line, that was our previous high of the day. So this is like our high of the day breakout for Comex. And then we got news. Will it come back down? Will it retest this? Okay, so when I draw like a bullish zone for gold, in case it comes right back in there, maybe we can buy at 3304. Okay, so let's get ready. 45 seconds for the news. We'll see what happens. Thank you guys for the likes on YouTube. We do appreciate you guys. 200 viewers. Let's try and get it to 250, maybe 300 viewers. We're going to make a custom like indicator for YouTube. The more likes, the more bullish we get and the longer we stay streaming. If there's no likes, we're going to see a big bearish candle coming down. So we're going to make a custom like indicator for YouTube. Okay, here we go. Get ready, guys. Okay, so it's bullish. It opened bullish, came back up, kind of retested that high. Okay, it's just the first 10 seconds, but still acknowledge it was a bullish open. Okay, just keep that in mind. It's continuing to drive. Okay. You see how US 30 traded right in there and coming right back down. So will it get a second bottom? Yeah, you can refresh Forex Factory maybe if the news is released. Okay, so prelim GDP quarter over quarter, better than expected. Okay, so negative, that's better than expected. Unemployment claims. Okay, so look at the unemployment claims. Red, 11,000 more than the forecast and 13,000 more than last week. Unemployed, so that's a big number. More than 13,000 individuals are unemployed from last week to this week. That's not good for the US dollar, so that's why gold is still moving up. Now we got maybe a bottom. Okay, so it came up, but maybe we'll get one more pullback on US 30. Okay, so good move so far. What we have on US 30 is it came down right here. It's bouncing back up. Okay, so we'll see, will it close above some bodies? Will it come back down? Will it come for a higher low and go up? Or I'm going to wait for 3 more minutes for this full body to close. Same with gold over here. Okay, is anyone in a trade right now? I don't want to hear anyone is selling gold right now. I only want to hear if you're buying gold. With US 30, it's mixed right over here, but careful selling gold. I know some of you guys are maybe testing it out, saying it's at a point where it's got to go down. It doesn't need to go down. Okay, I used to say that to myself too. There's no way it keeps going up. There's no way. So it's got to go down. No, it doesn't. Gold can just continue to drive all day. Doesn't need to come down. Markets don't need to come down for us. But when it reaches that yellow point of interest, then it could get interesting because that's now getting to a daily resistance. And it's overbought. But remember what I said, it's in an area of strength. That's why it's still cutting through. I guarantee you all of these sellers, their stop losses are getting smashed right now in the market. Okay, so what do we got here? USPC cores breaking quarter second estimate actual. US GDP price index actual 3.7, forecast 3.7. US continued jobless claims actual. Sorry guys, I'm just reading for financial juice here. Okay, so those unemployment claims week over week, not the greatest. Okay, so now we got rejected, coming back down. Where will this body close? Minute 45. Good leg up. Okay, so at least we found some support on US 30. Okay, whether we're in a trade or not, we're still developing structure. This might help us going into 9 a.m. This might help us for Wall Street. Okay, we're still analyzing. So like right up here, that yellow line, a little bit above and a little bit below. Like if you want to give yourself a zone. Okay, we'll see what type of reaction it gets when it trades in there. 3,000, 314, 315 inside here. Okay, so you see how US 30 came up again. It made a higher high just on this like trend. Higher high, higher low, higher high, higher high, but they're pushing it right back down. We're still below all of this. We're still below that red box. So will they push it back down? 25 seconds to go. Johan, you're on a buy from 3303. Nice. You're up 100 pips right now. Trail it behind with a trailing stop loss, unless your plan is to continue to hold it. Okay, so we got another good body. Okay, so what I do is kind of cut line. Okay, right there. Okay, let's cut that candle, that bullish candle, in half. Okay, so if we get a pullback to 3311, it could continue to go back up. Okay, so it opened bullish again and continue to maybe fill that wick and drive into here. So it's holding good structure gold, still bullish. Careful trying to sell this thing. And now maybe we have a pronounced neckline on US 30 right here. Okay, so you see a body, just an impulse wick. They closed, they opened it bearish, ignited. So will it come all the way down, back down in here, or will it kind of retest 50% of that bullish candle right there? I know it's a lot of lines, guys, but kind of want you guys focused on like a pullback. Okay, so it's turned into a bearish candle, flipped bullish. So this candle might have enough volume to fill those wicks and then continue to drive right up to this red box if you're looking for that. But what I kind of assume right in here, there's some sort of resistance, like right here. Okay, and then maybe we wait for the second opportunity down here if we get it. Maybe this might not be the full neckline. Maybe this will be the full neckline. Okay, but this, let's just see what happens here. Okay, again, will volume close above here? Will it break impulsively? Will it come back down? Okay, so look at that. Now we got a shooting star right at that yellow line, right at that daily position, inside that red box. Now it's pushing down. Okay, so first thing is, if the sellers are for real, let's see how they react at 50% of this bullish candle. Will it come all the way down there, and will they come all the way right back up? So you see right there, they pinned it, okay? So that, and it wasn't just by luck right there. We remember, we spent 30 minutes doing a solid top-down analysis to figure out this area right there, okay? So it is getting rejected where the big sellers are waiting, okay? But how far down are they going to push this? Now we're testing 50% of that bullish candle. See how it's momentarily got a wick right now. So will they come back up? Will they push it below here? Where will this bearish volume close? Will it close below here for one more leg coming down? Will it come back up for a double top? We look for a second top up there. Okay, so you see right there, I was right about that inside neckline. See how it's coming down? Okay, now is it going to come all the way down to that second double bottom? Okay, so you see the sellers are still strong in here. Muhammad Ali Jr., welcome. 100 pips on gold. Congratulations, Habibi. Good job. Just secure as much as you can. Okay, so we got an inside candle, spin top. You see how it respected 50%? Okay, again, it's not by chance why it just did that. That's the point of interest on that volume of that bar, point of control, POC, whatever you want to call it. Look at that now. Look how bearish that bar is. Okay, so those buyers that counter traded that, did they do anything? Did they grab their pips? Did they dip out of the market? Did they place a break even? Did they scale out? That was about a 50 pip move coming up. But you're coming into resistance again. Now they pushed it down. We got a wick coming back up. So let's watch now. Now we're in a consolidated phase in here. Same with gold. This is now in a consolidated phase right now, right here. I get therapy like out of charting. I don't know. It's when I'm having a bad day, anything, nothing to do with trading. If I'm just having a bad day, I like coming to the charts. It's kind of like therapy. It's kind of just, I come to the charts and it's really relaxing. Just watching, learning. You don't have to be in a trade to learn. You don't have to be in a trade. When you are in a live trade, it makes it, your emotions kick in. Then you really, you get emotionally into the trade. Like if you're buying and you see this big shooting star, your adrenaline, your like everything changes. Okay. But if you're trading with proper risk management, there's no need to panic. Like for example, you don't need to over leverage your account. The traders that are over leveraging, they're the traders that are panicking when they get into a trade if they suffer drawdown. Boogie, it's very therapeutic. We need it after the Knicks games. I don't know if the Knicks are going to pull it off, man, but Oklahoma, they just look unstoppable. Did anyone watch last night? Holy shit, man. They're unstoppable. Okay, look at that US 30. It closed below that green box we put. So it's got to go red, okay? So now look at it still coming down. Okay, so again, that was just a little, a step, but nothing happened right there at that neckline. Okay, so we got to get rid of that, or a cut line. We can bring it right down there now, kind of 50% at those bodies. Wow. Okay. Okay, so where did it close? Inside there. Now, again, it could come back up. What we're looking for is maybe a double top and then to come down, or will the sellers kind of break just a little bit more? Okay. Okay. Will this be like kind of a fake out down here? Will it come back up and close above here? So again, there's no trade for me as of yet. I'm still watching. I know if we get in a sell here, this could be one leg that comes down and then it comes back up, and then maybe I want to sell the second leg, because I've been getting caught this week by selling like the first leg, and then it comes down and then it comes back up, and then I go and draw down, and then maybe sometimes it hits my my stop loss, and then it goes down. It happened to me yesterday, so I'm not playing that game today. I learned my lesson from yesterday. I'm not just gonna sell the first leg coming down. I want to, if it is, I'm gonna sell the second leg coming down. So you see how it kind of impulsively broke, might come back up. The second leg might be the powerful one. Same with here. You know, where it came up, I was looking to buy the second leg when this candle was coming down, but then I saw it close below. I don't want to buy a bearish candle that's retesting the red box and dropping down further. This will be a good opportunity to buy. Think about it. These buyers that bought right here, their stop losses are down here, maybe in here. So not only will they get stopped out, but then these are where the big buyers are waiting. I want to buy with the herd, the big buyers, the smart money. They're waiting down in here. Like right in here. Come down. See the magnet? Let's pull this volume down into here, and let's look for buys at this area. Okay, you see that? If we sold that leg, see how it came down and now it's going back up. The volume is still trading in this box. You got to learn some sort of discipline, guys. You have to. Otherwise, you could get faked out all day in these markets. So just, if you don't feel comfortable taking that first leg down, always tell yourself, I got to wait for that second leg. Sometimes it's there, sometimes it's not. But I'm better on the sidelines, because when I'm on the sidelines, I'm not losing any money. Okay, so a lot of traders will say, Ron, you missed a little bit of a sell there. I probably would not have pipped and dipped on that little thing because I'm looking for a bigger move. So I would be stuck right now. And then look at it coming right back up. Okay, so guys, I hope you guys are honestly learning and not just here, just watching, where's this guy going to buy, where's he going to sell. Sometimes like this, it takes hours. Even a scalper takes hours, unless you're individually trading one single bar. And I don't want to do that here, because a lot of traders don't understand single bar trading, and then I get frustrated trying to do it, because sometimes they go up 20, 30 pips, I exit and you guys don't, and then it comes back down and hits stop loss, and it's just too hard to do this. Like I enjoy 1 minute scalping for myself, because I know exactly what I'm looking for, and I don't have to justify to others what I'm looking for. Sometimes I'm in a trade just this candle. I buy off the bottom, zero drawdown, it's 20 pips, I'm in and out. Sometimes like just single bar scalping like that, and then you look for 5, 10 of those trades a day, you're good. I'm not looking for major moves, but that's single bar scalping. It's completely different than everything. But look at here. Okay, so we came down, we made a low. Will it come back up and close above here? Will it retest this and we drive again? Will the volume stay below here? Will it come to this magnet down in here? Maybe we can, gravity will pull it down in here. Omar, you're looking for a seller if gold makes it back to 3320. 33, yep. We'll see if it can get up there. Okay, so you see that, guys? See how it just impulsively broke, still holding a higher low, and look at a bullish candle coming all the way right back up. Okay, so if we sold, we would have got sucked into drawdown right now. Okay, and then if we, well, I'm just saying myself. For example, if I sold that, technically as like a scalper, my stop loss would just be above like the high right there. So I'm not the only one scalping. There's other traders who sold that. Their stop losses are up here. This is what I also do. I watch to see if the market will come up, take stops, and then go do this and then drop. Okay, so you know while I'm waiting, I'm always like kind of anticipating where other sellers in this situation where they place their stop losses. Traditionally, they're above here. Okay, so then I look. I'm not in a trade, but I can pretend like I'm in a trade. If I was, my stop would be there. Would the market want to come up and take the stops and then go back down? Okay, look at this now. We got a nice bullish ignited candle opening right now, 8:45. So we have a new 15-minute candle in the market as well. See how it just came right in that red box and then rejected it back down. So now I'm looking, it's filling back up. Will it come back above here? Will it close above here? Then that could be a little fake out coming back into here. Okay, so this candle is going to close in 3 minutes. It is, look at the opening of it. So it is a bullish ignited open, nice volume coming back in. So again, this is impulsively coming in. It could just come up, it could go back down. What I'm looking for is where this body will close. Will it close above this zone again? If it does, I flip the red zone green. Maybe I can buy a pullback off of it to continue to come back up. Okay, so I'm going to let that candle close. All candles I'm going to let close today. I'm not trading on any impulse today. Okay. All trades, if I look for, are going to be confirmed with bodies closing. Okay. I'm just putting that out there. If I do take an impulse, I'll verbally let you know, but I won't be looking for impulse trades. Okay. So now look, it came right to the top of that zone. Remember, I just did a little bit above, a little bit below. So, okay, a little bit above, came down. They rejected it back down. Are we going to come back down? Okay, so it's the volume is still maybe concentrated in here. Okay, so 2 more minutes to go. See that? See the impulse, guys? Okay, so impulsively, where did it impulsively? Towards like 50% right there, the 9 EMA, they rejected it back down, but now it's gonna, where will the volume close? Okay. Okay, so you see, again, they pinned it, pushing it down. Okay, so it's a shooting star candle coming down again. The volume is kind of barcoding in here. Bullish, bearish, bullish, bearish. But we still have higher lows, you know, so we need like a solid bearish candle to close below here to really change the structure of the market. Market structure shift, whatever the hell you guys call it. With all of the new language out there. I'm old, guys. I'm old, so I don't know all the new language out there. All of the new names for these things. Change of character. Lee? Okay, my bad. See, I don't know the names of these new things. Okay. But here we go. A nice bullish candle trading right into 50% there. If it closes, we're going to flip this red zone green. We got now some barcoding. They pinned it, pushing it down. Yeah, I don't think the meat of a candle, the hamburger meat, is a saying from like a Smart Money Concepts or ICT or. um, okay, so it did close above, red to green. Go through the motions. We got work to do. Okay, so now it's retesting. We got maybe it broke that grabbed liquidity, retesting. Okay, holding may turn into now a candle that wants to go up. I might be looking for a buy now. Okay, so I'm gonna buy this US 30. Okay, the reason why I'm buying is it did break, it opened bullish ignited, it did close above, and it just retested. I just want to see if it can fill that wick and then fill this imbalance back up to this red zone. My stop loss, I can place it all the way deep down into this green zone, or I can just go really, really tight and just be right below that previous low. But I think that this could build, so I'm going to give it some room to breathe. Okay, so I'm going to give it room to breathe below that yellow line in the green box. I'm going to get rid of this magnet. I don't want it to come down there. And then when I'm giving it more room to breathe, I'm not just looking just for a trade right to that red box. I want to go now to the next red box. Okay, so I'm giving it more room to build, even if it does need to go and draw down in here, maybe continue to build through here and then come back up. But my ultimate stop loss is below here, because then it could be a bearish day and just coming down bearish, pull back and continue going. I don't want to risk more down in here. Okay, so I'm going to test out a buy. I waited for the volume, the liquidity to get taken out below here. I got a nice bullish ignited candle that did close above. So I waited for it to close above and I got a retest. It's still in drawdown right now, but I did have an official retest that moved up. Okay, so that meets my criteria for taking a trade. So, and then now we've got, okay, so they pinned gold coming down. Again, this is an impulse candle breaking on gold. If you want to go on impulse, you can. Or you wait 2.5 minutes for the body to physically close below here. Okay, so I'm waiting on gold to physically close. We got a good push on US 30. Again, the measuring tool. The measuring tool is very, very handy. So then you can measure exactly. If it comes up to this red box, okay, that could be 30 to 40 pips in there. Okay, that's when I will be adjusting my stop loss, reducing my risk. Ultimately, if it can get to the point up there, that could be 75 to 80 pips up there. Okay, but we got to test this resistance. Okay, so we got a nice, if you're just trading a single body candle, that's a single body scalp. Okay, if you like how I was saying earlier, single body scalping, there's 25 pips right there. Okay. I'm not ready to go to a break even yet until we break this red zone. Okay, and it might come back and come back on me, you know, but my plan is to get it up to here. Slowly but surely, because, you know, like we're fighting against selling pressure. Alex, good morning. Thank you for joining, brother. Oh, Armando, we got a trade idea for 42,250. 42,250. Okay, 250. Right. Okay, up here. Yep. Okay, got you. Thank you, bro. Okay, see that again? Impulse break on gold. Okay, it's got those tweezer bottom lows coming right back up. So again, what I was saying, wait for bearish volume to close below here. Okay, so we got 30 seconds. We're pushing nice. That's exactly what we want. If this candle can break our red zone and close above there, look at how small these wicks are. We could pop those and fill right up to there and grab 60, 70, 80 pips out of this with minimal drawdown. But this is a red box for a reason. So it wouldn't surprise me if it comes up here and then sellers push it back down. But what we got to do is judge where 50% of this volume is into the close. And it doesn't look like gold closed below there, so it's just an impulse. Here's the close now. Okay, so close. The cut line right here, this red line, bring it up just a little higher to represent 50%. We got a bullish ignited open. Okay, so opened, ignited. We got to acknowledge that. So can it build and just take out that wick prior to it breaking its ignited open? So it's still ignited, it's still ignited, still ignited, still ignited, fill, fill, fill. No, we lost our ignition right there. Okay, you see how we lost it? Turns bearish now. So we still have this selling pressure. Again, I'm counter trading against this move here. So now if it retests, 50%, the cut line and our 9 EMA is there as well. So we did find some buyers. See how it kind of flipped up with the wick? So now we got to continue to come back up. So it's back to the point of interest where this body opened, and can it fill back up to the wick and drive? Okay, so you see now it's a doji candle. We're right back down where we opened. So we got a retest, a healthy retest, higher low, still respecting 50% of our previous point of control volume. You see the fake out on gold? See how they faked out those sellers and then they open it bullish ignited and continue to drive? That's why I said, guys, don't bite on those impulse moves. Okay, so we still have this bear volume retesting here. If it can't hold 50%, then it wants to come back down to like entry point. But again, that's why I didn't move to break even so quickly. I want this trade to maybe develop. Okay, so it's still testing 50% right here. And keep in mind, in another 3 minutes, we're going into 9 a.m. 9 a.m. So when 9 a.m. comes in the market, you get a new hourly candle. Could be momentum shift, could be volume changing, could be hourly buyers and sellers enter the markets. So when you're in a trade, you have to expect now volatility coming into the markets. Okay, and now also acknowledge gold. It came in the red zone, back down. Came in the red zone, back down. Came in the red zone, back down. So now we got multiple rejections up here. Still in this bullish flag. Could continue to drive. We're still holding our retest position right here, 50%. 42,200, okay, that psychological area. Okay, and if gold closes above here, still bullish, it could continue to drive. So you see it's not ready to break down yet. Still driving, still bullish. Big bullish daily candle. US 30, we lost our 50% point of control. So now it's coming down. We'll see if we can get a higher low, or ultimately will it come back down, maybe retest our green zone. Okay, good, big, strong candle. Reese, DXY fell off a cliff. Yeah, I'm reading right here on Financial Juice. Trump trade advisor Navarro, CBO is historically bad at estimating tax bills impact. Trump administration not surprised by the trade court ruling. So they're talking about the tariffs, everything, the tax bills. A lot of conservative Republicans are not for Trump's tax bill. They don't want to add $5 trillion to the already $37 trillion of debt US is in. That's not fiscally conservative. I don't know how he thinks they would accept that. It's just stupid, in my opinion. Like, you got to have a little bit of financial education. You're in $37 trillion of debt and you want to add $5 trillion more on top and take food stamps away from the homeless and Medicaid. Like, what world are we living in? Ontario is adding debt too, where I am. Oh yeah. Ontario has no fiscal policy here as well. We've got doorknobs for politicians here too. It's pretty much all over the place. Okay, but closed above. So that red zone momentarily is green. Okay, so, and then this is a bull flag that broke out of here. Gold could continue to drive. So it's not ready to be sold yet. So you see that I kind of pissed away my profit. Didn't do anything, but I'm still in the trade. So I got to now retest this green zone, see if it can continue to build. Oh, and Trump's bestie, Elon Musk, is calling him out too. Elon Musk said, I just read earlier yesterday, saying it's going against everything he's doing with the Department of Government Efficiency, the cuts he's making, and Trump is adding trillions of dollars. He goes, this is just, it makes no sense. So even Elon Musk is calling him out. It's hilarious. It's like a reality show watching all this unfold. Okay, so gold's still really bullish. So nothing broke down. See, it was just a small pullback, couple fake outs, and continued to drive. Okay, so Dow Jones is right back to my entry point. I'm still in it, okay? That's why I gave it room to breathe. I didn't take out anything. I'm still in the trade. I will verbally let you guys know play by play exactly what I'm doing. Gold pullback, yeah, pulled right back into here. And then like the RSI guys, so if you're looking at that, see how it's still overbought, still in an area of strength and still drives higher and higher and higher, but it's still showing bearish divergence. Okay, just we don't have like change of character. You guys said it correctly. Like we don't have a change of character. A bearish candle closing below structure to initiate a momentum to go down. And then in 5 minutes, 5-10 minutes, we'll do NASDAQ top-down analysis. And then we'll get all three charts ready going into Wall Street. And also take a quick break if anyone needs a break. It's hard sitting, if you got to stretch, if you got to grab a drink, if you got to go to the washroom. Okay, so we got 2 more minutes. I'm looking for the buyers to close it again above the red line. I go line by line, like to show a little bit of strength. Can they close it above this point of interest? If they can close it above those bodies, that's even better. Okay, so we got now a big bearish candle right there at the 3318 coming down. So again, it's going to trade back into this consolidated zone. If it closes below here, we flip that red box or green back to red. Maybe we'll come back down and close, and we could get that leg coming down. However, it could just be a pullback and continue going back up until we get that closure. That's a good retest. Okay, higher low, coming back up, bar coding, bullish, bearish, bullish. Okay, that's a big response by the sellers there now. Okay, and when did it start? 9 a.m. Okay, see the hourly transition. Hopefully we get an hourly transition on US 30 cutting through here, but it's struggling. Lots of resistance still in here. Wow, okay, so that's a really big bearish engulfing candle. Okay, 30 seconds to go. If this thing closes below here, we'll factor in where 50% of this volume is, and then might come in there and then back down. Okay, so we'll keep an eye on all of these securities. Again, we have a lot of work to do because we still got to do NASDAQ. I typically wouldn't be doing NASDAQ right now. Like if I was trading by myself right now, I would be sticking right now with what I'm watching. I wouldn't even be looking at NASDAQ right now. I wouldn't want to take my eyes off of anything right now. But we got kind of what we do here. I'll get yelled at if I don't do NASDAQ. Okay, so look, it did close below this zone. Okay, so that is red. Sorry, I got to do this quickly. Red. 50% of that bearish candle is right there. It's right below the zone. So now, sometimes there's intuition when to take an impulse. Okay, if you do take an impulse, you're following that big bearish candle. It retested already, and if it breaks like a shooting star candle, it could typically break those two lows and drop. So there is a time and place when to take an impulse candle. However, if you do not feel comfortable and you're still following your rules, then you have to wait for that body to close regardless. And you might miss out on a impulse scalp, okay? But ultimately, let's wait for it to close below here, okay? Because we're still technically trading inside this zone. And I see right there where it broke and it came back up. See right there where it broke and it came back up. But now you got a response, like a big response. That's a big bearish engulfing candle. So that's sometimes where I trade impulse candles, right? Like I'm itching looking at that, but I'm trying to follow my rules on this call. Okay, because I'm itching, guys. You can see I'm itching my beard right now. So I'm literally itching. But we're already in a trade over here on Dow, and it looks good. Okay, so we've retested. We're back in the money, but we want to get in and test this red zone. So you see how it's still resistance, 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 but we are building a little bit. We still haven't retested our green zone yet. So technically, you kind of got to babysit your trade. You know, you got to watch it. You got to watch it. I watch everything. Higher low, higher low, higher low. We haven't built a new higher high yet. Okay, that's why sellers are still pushing it down. Once we create a new higher high, like for example, above this wick right here, above 42,220, then the entire depth of market changes. You'll see pending orders get pulled above us, maybe repositioned up here, sellers offering, maybe they will cancel their order here, opening up this like a highway. They'll open it up, give us clean traffic to drive through here, and then they'll place their offers up here. Also below us, we'll see buyers that want to buy in here. Maybe they'll start putting their pending buys right here, maybe into this green box. So the whole depth of markets, like when you pull a string, if you pull it one way, it affects the way how it moves below us and above us and things like that. The depth of market is constantly moving. What we need to find is the aggressor in the market. The aggressor, whoever's the aggressor, will execute all of those pending orders. So who is the aggressor? The pending orders are just like sitting ducks in the market and waiting to get executed. But it's the aggressor who executes those. So I'm hoping in this situation, the aggressor momentarily will be a buyer to execute all of these and drive up here. But history is telling me that it is the seller who is the aggressor pushing the market down. But what I'm looking for is, can it build prior to Wall Street and move out of here? Because then Wall Street opens and then it's a whole different beast. It could open, come bearish, take out these lows, gather all this, you know, then I'm stopped out, and then boom, it drives. So that's happened to me a million times. Probably happened to you guys as well. So I'm hoping that this trade can develop in the next 20 minutes prior to Wall Street, and then I can control my risk, get to a point where I can take my stop loss to break even, get to another point where I can start to scale out, and then get ready for Wall Street with less worries. Guys, all I need is 5 minutes to do NASDAQ. I know some of you guys are waiting for it, and I will do it, but all I need is 5 minutes. So even if we wait till 9:15, I can still get NASDAQ done, no problems. I'll do it much faster, okay? I keep saying I'm going to do it faster, and I talk too much, guys. Believe me, if you go out with me and we have a coffee or something, you'll get sick of me because I don't stop talking. I was talking with my neighbor yesterday, and he ran into his house. He said, "Man, this guy doesn't stop talking." He even got yelled at by his wife. I feel bad for the guy. But he was picking my brain on my lawn. My lawn is luscious green, thick green grass. He was, and I didn't want to give him everything. I didn't want to give him the sauce, but I like him, so I gave him a little bit. Remember the secret, guys, okay? Keep this between us. You apply fertilizer with a hand spreader every 2 weeks. That's the secret, guys. Don't tell too many people about this. Okay, so you see how we're barcoding. It sucks, okay? It sucks when we're in a trade barcoding. It's frustrating, but you got to continue to watch what's going on, okay? So it came down, higher low. Can we continue push up? We're in this range. I'm in the money, but it still sucks. They could easily come down, but that's why I gave it room to breathe without panicking in the trade. I'm not risking my entire account on this trade. If I get stopped out, I still have multiple trades for the day to recover this, but that's it. We got stuck in this range right now. So it's bullish, bearish, bullish, bearish. Maybe we'll need to come back down into here, tap into this green zone for it to take off. It might just be bearish again, coming back down. Okay, so look at here, guys. So that impulse where I was kind of saying on the impulse, see, I would have got caught on that. So that's why following rules. Follow your rules, okay? If you're going to take an impulse, remember, feeler trade, test it out. You move your pawn, okay? And then here you see that it didn't work out. And it's still very bullish, okay? So we're getting a big bearish candle now coming down. Okay, so now we actually, again, tapped into this green zone, okay, right there. Where I took the trade, it came down, it retested, that's when I took the trade. So it's retraced all the way back down to the retest, the initial retest. So this is where, you know, the sellers could definitely break through here and close it again below here. Then this turns red, then they're coming after to take out that low right there. Okay, so, but that's why I said, if you place a stop loss like right below that low, it's pretty tight. They could come down, take you out, maybe down here, and then it goes back up. So that's why my stop is below a daily position, the yellow line down in there. Man, this sucks. Okay, but okay, look at gold again. Came into that red zone and they rejected it back down. Okay, so it's an inverted hammer candle. We could get that close below there, and then that second leg could really get started to push down. Okay, so we got a retest in the green zone, deep in the green zone. So it wasn't the top, wasn't in the middle, it was close to the bottom. That's a good, solid retest. You know, when you're looking at that fair value zone, from that wick to that wick, it came right in there. That's excellent. That's what we want. So we're right back where we started. And now we got to follow the volume, right? So you know, like right here, guys, see from this wick to that wick, if you just draw your, like this zone right here, right there, you see from that wick to that wick, that meat of that candle right there. You see how it pulled back right into that meat of that candle? Those pending buyers were waiting and they got filled. Okay, that's great for us. But can now we build with this? Okay, sometimes if this works out, sometimes I go in for a second continuation buy and take advantage of the move. I'm already in one. If now what I see what's happening and they can close it above this structure, it could build and break out of here. That's where maybe I could look for a second attempt to add another buy position, but I got to wait for that closure. So it came up and the sellers are still there pushing it all the way back down. Okay, so it's in a tough, tough area. But that's exactly what we wanted out of there. But it's just a lot of selling pressure. Okay, look at gold. Holy shit. Okay, now it's a gravestone doji candle where it was bullish ignited. It came all the way up there, right in there again. And now it's coming down. Watch now 10 seconds for the close on gold. Okay, this could be a potential sell opportunity. Oh man, and I hate taking two trades at the same time. I hate it, and I still haven't done NASDAQ, and it's 9:15. Oh damn. Okay, so did it close right at the zone? Yes, it did. Okay, so now it's pushing bearish. Okay, so I'm going to go in on a sell. Like that's what I like for a setup. I'm going to keep my stop loss now above that yellow line that's been multi-tested, maybe just above that red zone up there. That's my stop loss for gold. I'm looking now to sell and to push it down, maybe to this red line, maybe ultimately to this green box. We got Dow building again. Okay, so I'm in a sell here. Right here where I sold. Okay, so if it comes down to that red line, it's about 38, 40 pips. If it can come down to the green box, we're looking about 50 down in there. Okay, so my stop loss, because I'm going to get off both these charts, guys, because I got to get NASDAQ. So it's hard for me to manage both of these trades, but my stop, okay, is right above that yellow line above the red box. Yes, I could get stopped out, but definitely that's where I want to get stopped out because I don't want to have gold continue to just to drive. Okay, so it got rejected. It did technically close below there. Maybe I itched too fast. I got in, but the trade is set now, so I'm in it. There's nothing I can do. I don't know if I waited patiently for that lead, to tell you the truth. I got in, it opened, bearish, ignited, and it dropped, and that's when I sold, and they came back up. So, you know, it wasn't a perfect execution, but I'm following the rejections, you know, I'm giving it room to breathe in case it comes back up. Sellers are repositioning themselves here for that to really break down. But I know that I could potentially get stopped out, but I don't want to just, you know, just let it just drive, okay? It's a pretty conservative stop loss because I could be above that high right there as well, the highest point of the day. We got a good bullish candle on Dow. Oh man, guys, it's 13 minutes. I got to do NASDAQ, but let me just set my hard stop loss for gold. Oh shit, and everything is moving. Guys, do you guys mind if I wait for this to close? The next 2.5 minutes. Really got to manage this. Okay, I promise you, I will get to NASDAQ. It only takes me 3 minutes. I won't be marking up the all-time high supplies. We know that. I'll get right into it, but here we got to manage this, okay? Because we're in good profit right here now. 50 pips on Dow, exactly 50 right now. Yeah, why did I take that gold trade? Look at the dirty. Oh well, it is what it is. We'll test it out. Sometimes I'm like, just stop me out so I can stop looking at this trade. No, I don't say that. Okay, so did we break for a new high? Yes, we broke this high and this high. So we've created a new higher high. That's correct, we have, and that's what we need to continue a trend going up, is creating new higher highs. Now, the volume, where will it close? Okay, so I'm potentially going to get stopped out on gold here. It's getting up there. I feel like adjusting my stop loss on gold and putting it above that daily high and looking for a bigger sell. Do you guys mind if I readjust my risk on gold? I can give it a little more room to breathe. Shit, guys, I don't know what to do here. 60 more seconds. I gotta just watch where this candle closes. Yeah, what I'm gonna do, guys, is I'm just gonna readjust my stop above the daily high, and my target for profit will be bigger down into here. Okay. So I gave it more room to breathe above the daily high up here. Right up there. So I'm just right above the daily high. Keep that between you and I. Hopefully the market makers don't hear this. Okay, but we got to watch where now Dow closes. Okay, so where's Dow going to close? Please close above here. So then we can flip our red zone green. That's rule number 1. But it's got to close above the red box. Technically, I'm very technical. Okay, there's the close. It did close above. Green to red, we got an ignited bar that just opened. Okay, so we don't have too much of a wick to fill, but if we can fill it, we can maybe fill right up to the top of that red box. That could be about 65 pips up there. Okay, shit, I'm coming back up here. Okay, so if we can break this wick, I'm going to take my stop loss and reduce my risk on the Dow trade. Okay, if we can just break that high. Come on, it's a nice ignited bar. Oh, we got those tweezer top highs. Disgusting. I hate when I see that, okay? It's like, it's the worst thing to watch tweezer top highs as a scalper. Some of you guys don't care because you guys are holding for like long, but as a scalper, that just kills momentum right there when you see that. But it did come down, still reloaded, got the rocket fuel. Now we're breaking, so now we can maybe possibly drive and just fill this little imbalance right up to the red zone. Okay, so just need that little extra push. Okay, there we go. So now I'm reducing my risk. I'm going to go to a break even. Normally, I'd like to leave it right there. Okay, guys, because sometimes they will come back down to break even, then fly. So it could be under this green box. But if I didn't take that gold trade, I would have left it right there. But since I'm in the gold trade, I don't want to get stopped out down here. So I'm going to a break even, right, on Dow. Okay, this trade. It's pushing. If it gets up there, I'm going to start to scale out 80% at 60, 70 pips up there. Take out 80%. At least that will cover my stop loss if I get stopped out on gold. Okay, so that's how you can manage 2 trades at once. Okay, I'm taking out 80% up there on Dow. Okay, grabbing 80% and then leaving 20% running with a break even going into Wall Street. Do you guys understand that? Okay, so as soon as it broke that wick moving, I took my stop loss to break even, and when it came close to that red box, I just took out 80% profit. At 65 pips is out in my pocket, so it'll kind of cover the stop loss if it gets hit on gold. Okay, and I got runners going into Wall Street. If we continue to break, see, we want to fill to that wick and that body, 42,000. 290, I would say 292 right there. Okay, so if it continues to run, that could be 100, exactly 100 pips up there. But we have now the bigger red zone. This was the minor one, so this can now be for, if it pulls back, we could buy off of this. And if we move above here, same thing. If we can close above there, we flip this. But maybe pullbacks, then you determine where's 50%. Get your cut line. Where's 50% of that volume right there? Okay, all good. I'm in drawdown on the gold. Shit, I bid on that. I put my hand in the cookie jar too early. I waited, and they still sucked me in, okay? But thankfully, I made a little bit on the Dow, and that will cover that, okay? But I'll still stay in that. It's 9:23, so I'm going to go do NASDAQ really quickly, guys. Very, very, very fast. So please manage these. I feel like just exiting gold right now and then just clear my head. Yeah, I'm going to do that, guys. I'm just closing gold right now. I don't like it. I'm closing gold. I took the loss on gold, but so it's kind of like a scratch. You know what I mean? I made a little bit here. I lost it over there. It's all good. But I want to really just do NASDAQ and forget about that gold trade. So I closed it myself. Okay. Otherwise, I would have got stopped out right there. So I saved myself 10 pips. No big deal. But it's closed. Okay, it's bullish. It's right at the high of the day. I don't want to go into Wall Street. Maybe Wall Street will come down, but then I'll execute the trade. I'll sell back down below there again. But that's okay, guys. It's live. There's nothing more I can do. But that's what I would be doing if I was trading by myself without you guys. But right now, 5 minutes. Just let me do Nasdaq real quickly. right over here, NASDAQ. And you see it traded right in that red zone, right to that daily point of interest. That's why I take out 80%. I don't get greedy. Let's do this, NASDAQ. Okay, daily, really quickly. I'm not going over everything like the all-time high supplies and things like that. Well, in this situation, we have to because we're almost there. Like right there. Okay, so NVIDIA's earnings we had, you guys know that, pretty good earnings. We're not too far away from the all-time high. Our key zones really quickly that we've been doing every single day. So I'm going to do this a lot faster. If you guys have questions, I won't have time to answer them all. Pivot points quickly where we are right now. There was a pivot. Oh shit, I don't want to use that yellow line. There's my pivot indicator. Okay, so you can see now yesterday how we closed above it, and today we retested it and we're moving. We broke above this. So really quickly following yesterday, where did we open? So quickly, point of interest right there, close, open. The low of the day is this pivot point right there. So that's my purple line. We continue to push up. We took out yesterday's high right there, yellow line. Okay, if we ever pull back, we want to keep that as support. We continue to drive. Today's high is 21,813. Right up here, today's high, purple line. It got rejected. How much of the volume do we have in today's candle? Okay, where's 50% of this? It's like right there is half of it. Okay, so I know it's a lot of yellow lines, but if we pull back right there, the first 21,550, that's where we could get support. Right there, support. But we still have a really nice bullish candle, but a long rejection wick too above us. Okay, do we have any points of interest behind us on the wick? If we come up right there, there's bodies, and bodies. So yellow line placed like right in this location. Right there, 21,700. So that is our resistance coming up. Now, that's all I need to do on the daily really quickly. I do NASDAQ and Dow every single day, so I know that it's what pattern it has. It's got this kind of where it came up, closed, retested, and driving for a new high, pulling back now. Will it lose this and come back down, or will it continue to drive? On the hourly, just right now, key areas on the hourly. This big bullish candle right now, look at it. This was at 7 p.m. that kind of started this big move. Let's identify of this hourly candle 50% accurately. Open up close of that candle. There's 50%, 21,630 right there. Hourly white line. We're below it right now going into Wall Street. Okay, so let's make this white. And then our zone of interest, a little bit above, a little bit below. There's our zone. Stretching it across. It's a red. We came into it, push down. Came into it, push down. So that's an hourly red zone that we're trying to get above. It could continue to push down and sell today, but if we close above this, it could continue that leg pushing up. Okay, so get rid of this fib tool, and now let's go into the 5 minutes really quickly because we got 2 more minutes. Okay, so this was what we got. A little bit of choppy. It's kind of similar to what we just did with US 30, but you see, do we have a 5-minute bottom, like a green box? Yeah, right there. Nice little 5-minute box. Remember, the big red one is the hourly, so we're trading in it. It's building. Neckline, if we can close above here in Wall Street, retest this, we could drive. We've got a lot to backfill. Okay, so that's what we got indicator-wise. Add your 9. We're above the 9. Add your 200. 200 is right there. This is where we could have a bullish crossover, Wall Street market, and we'll add our daily indicator right there. Okay, so that's all good. Are we good, guys? That was quick. Okay, so bring in that right there. So we got NASDAQ on the right. We've got US 30 in the middle. We're still, look at the retest. So I didn't even watch this. I'm still in the trade, but look at how I trust my zones. See how it came bearish right into our green box? We could have added a buy at that. Like, that's why I personally stay with the securities I'm trading. I don't flip flop and things like this because I could have bought that and I would have been again in profit. Could have really made a significant gain and covered that loss on gold. That's why I stick with, I only trade one security. I don't do this normal. I used to do 6, 10 securities, all these, but it's just too confusing. You're not focused. Okay, so we're still above this. Okay, so that red box is gold is strong. Holy shit, it's strong. Okay, so don't even attempt sells on gold. You saw my mistake. I got caught and I got punished. Okay, but here we go. What do we got? 4 seconds, market open. Wow. Okay, so you see what they do now. Okay, look it. This is why I hate being in a trade in market open. There, that's it. That's break even. See what I mean, guys? That's why it's get in and out of a trade prior to market open. So I got to eliminate all this shit. So my 20% runner just got taken out. That's it. In 10 seconds. You see what I mean? All of that work in 10 seconds, it's gone. That's why these markets can really, really piss you off, is because of that shit right there. But let's see now. Are they going to take out that low? Are they going to come down, sweep the lows, drive it back up? So this kind of zone is kind of insignificant now. With this type of volume, we got to play the bigger moves now. Okay. Look at NASDAQ coming back down. Will it break those lows? Maybe that daily position. Will it close below here? Is it going to continue to be bearish? Okay. Oh man, you see, 10 seconds. That's kind of all it takes, is just like that. Okay, that's why I don't feel bad taking out 80% up there now. You know those woulda, shoulda, couldas? Okay, so let's just figure out now what they're doing with this 5-minute candle. So they took out that low. Remember down in here, it's a green zone for a reason. Down in here, that's that yellow line, that big daily point of interest. Gold is still driving. Don't look to short this thing yet. Wow. See in the news, I'm just reading Financial Juice right now. North Korea helped Russia increase missile attacks against Ukrainian cities. Holy shit. Now North Korea is getting involved. Russia supported North Korea's ballistic missile guidance performance. My God, what's going on in the world? North Korea supplied 9 million rounds of artillery and rocket launcher ammunition. Holy shit. That's why gold. You want to short gold? North Korea is supplying Russia with, wow, North Korea has shipped more than 20,000 containers of munitions and related material to Russia to support Ukraine war. That's why gold is moving. Okay. Okay. Now the markets are really, really dropping. Okay. So what we were trading was just a little counter pullback. See my zones, points of interest, and they dropped it down. Okay. Now that's the low of the day. We can see it right there. What will they do? Will they take out the low of the day, sweep out the low of the day, come back up, or is it going to be a bearish day? Okay, guys, I just want to say straight up, I apologize for that gold sell. That was my bad. You know, I saw that big bearish candle engulf. I saw that kind of where it got rejected perfectly. They set me up right there. They set me up. I gotta give it to the market makers. They set that shit up proper. Okay, so I'll give the market makers respect on that. Okay, but you see what they how they play those games. Oh damn. 9:15. I gotta make a mental note of that in my head. 9:15. They switched it around. No, Jitendra, I know North Korea has been involved for a long time, but it's been like closed doors. They've been, behind the curtains, but now it's live on Financial Juice. Okay, so we got 30 more seconds to go. Okay, so we don't have to trade right away. we can still watch. So if it closes below here, this little minor zone can be red. Again, this little minor block in here, that's a good block that we got to follow. See if volume will close above or below. We can wait till 9:45. We do have some 10 a.m. news. I can stay a little longer on this call if you guys don't mind. But again, look at what they do. They tease us with a nice shooting star candle. Again, I'm not biting for this shit because they'll just come down and go right back up. So just waiting. Okay, but what I can do is go through, that's a green to red zone. Okay, so that's, and you see how it's basically 50% of Wall Street's 5-minute candle. Okay, same with NASDAQ, that green zone to red. And you see how the point of controls already kind of set themselves up just with the volume. Just these zones are static. The volume is what's variable. Okay, so it's retesting. This could continue to buy. You know what I mean? Just if you want to continue to try buys, you certainly can. But then the market could turn bearish and stop you out. So, but if you want to continue maybe to buy with gold, you got a good retest. Hammer candle could continue to drive. If you do test it out, maybe place your stop loss below this zone. Okay, maybe to continue with the buying. I'm going to continue with the buying, okay? So I don't know, gold's bothering me right now. So I'm placing my stop loss below here. I'm going to look to fill that wick and drive to that yellow line at 325, okay? So I'm in a buy on gold. I'm still waiting for US 30 and NASDAQ to develop here. Welcome to the world of a scalper, okay? So scalpers just buy and sell, like very robotic. You know what I mean? Like if I just wanted that single bar that's 20 pips, I could recover my loss like right now. That's why I got to kind of focus on the way how I trade on these calls. But we're looking for, you know, I know you guys are looking for more than 20 pips, but if we are, okay, if we're looking for a bigger move, then what we got to do is we got to adjust our stop loss, maybe put it below those previous lows there, and then we're looking for a bigger target to the upside. Because that was just that quick little 20 pips in and out, but none of you guys are fast enough to do that or understand why I do that. So that's why I don't do it on these calls. But now this is where the market plays. Now I'm trying to buy now, and then this is where they're going to pull it down. Watch. Okay, so my stop is below this structure down in here. Let's see here. Okay, so can US 30 come back and close above here? And then maybe we get that next leg moving back up. Oh my God, this is where I want to exit this trade now. But I got to wait to see what happens in the screen zone. Can it catch a wick and flip in here? Gold's been a dick this week. yeah, it's okay. That's how the markets are moving. It's all good. Just don't risk too much. Okay, so you see how we retested that and they rejected it back down. Wow, NASDAQ is really dropping down. Okay, so we're almost at the lows of the days down in here. Sometimes the first 15 minutes of Wall Street, a lot of traders wait for the first 15-minute candle to close. $30 seconds to go. I might manually close out this this buy on gold, depending what happens in this box right here. just judging whether it gets a wick in here. Can still stay closed inside here. I like how US 30 is building. Okay, so 10 more seconds to go. Watch again where US 30 can close. Okay, so we closed in the green zone. So will it develop a bullish candle in here? Oh, damn, we got a sell position for right here. We got a sell signal, guys. So I'm kind of going against the signal here. Well, the signal just came up now, but let's see, maybe if it can build in here. Should I go exit this and go with the signal? Okay, let me close this out. Sorry, guys, we got a SST signal right over here. So I closed that out. Discord right here. Okay, so it came through. So again, I don't want to just go in and sell. I want to see if it can close below here. Oh my God, this is where gold plays too many mind games. Now it might come back up. I should eliminate gold off this chart. Get rid of this shit. I want to trade my US 30 over here. There's too much going on. What's now with Japan now? Japan Prime Minister Ishiba on Trump's call. Oh gosh, so Trump is now calling Japan now. We aim to create jobs through investment. We exchange views on tariff issues. I think Trump and I deepened our understanding. Crazy markets with this guy Trump. Okay, so NASDAQ really pushing down. So let's keep an eye on that low of the day and see what happens down there. Should we take one more opportunity sell on gold? And that will be my final one. Okay, I'm going to test it out. We got a sell signal. Going in on the sell. Stop loss. Ugh, I don't want to place it this high, but gold is tricky. Okay, and I'm looking to break all of this shit down here. Okay, so this is my final trade of this session with gold. This thing is really, really pissing me off, but we'll see. I'd like to really hold this structure right here. Hopefully this is it. I know what I got to concentrate on, Efren, is the Dow over here, but I want to get my liquidity back on gold. That's I'm very stubborn like that, and I apologize, guys, on this call, but I'm very stubborn like that. I don't like leaving liquidity behind. I don't like the market makers to get the upper hand here. But just one big, like all of these sellers that have been accumulating, like just drop it down in here. You know, like all of these buyers, like all their stops are right in here. Just break it down. You could break down and come right back up, but that drop would be perfect. Oh, it was a false signal, Boric. Someone DM'd me and then they erased it. Someone in the group told me it was an SST signal at 3:15, and then they apologized. It was a wrong thing. So, yeah, guys, sorry. I was just following someone in the chat that told me it was an SST signal at 3:15. Anyways, we're in it. Let's see if the volume can close below here. Okay, 24 seconds to go. Okay, so gold, US 30 still breaking down. I kind of want to see what type of reaction it will get in this green zone near the low of the day. Yeah, wow. Okay, okay, so good push, good close. Okay, so that green to red, quickly. Can we just maybe doji, push that wick, break this zone? At least we can recover a little bit here. Okay, so just coming down to again, that's 40 pips. But the big, if we can break, okay, that's a 100 pip move down all the way down there. But that would really help us out. But we got to go block by block. We got volume that closed below the 9 EMA, finally. That's good. Okay, so this is retest time. 50% of that bearish candle is right here, right at the red zone, right at the 9 EMA, like right in here. So maybe if we can just consolidate and drop. Dow is still pushing down. NASDAQ, low of the day, right there, purple line. Oh my goodness, if we can just break this little critical zone right here, then we could have nice push down. Okay, even the 15 minutes are real choppy on gold. Bearish, bullish, bearish. That little choppy doji candle. Wow, if we can really break this, 50% of that bullish 15-minute candle is right there. Okay, so back on the fives, that red line, 3306. So we're kind of in the shoulder, this left shoulder, that kind of head. We're right back in this consolidated shoulder area. You know, if we can keep the offers down and break this, that could be a good drop down in there. But gold is stubborn, coming right back up. Okay, so NASDAQ is very, very close to this low of the day. We're getting that retest again. I wouldn't mind if it consolidates inside here, to tell you the truth. If it consolidates inside here, I'm okay with that. Okay, because that's where most of that volume was consolidating. But to keep it inside this zone here. Yeah, come back to NASDAQ. I will. I don't normally trade gold in Wall Street. I'm kind of done with this thing in Comex, but it's bothering me. It's bothering me. Okay, but for real, NASDAQ is getting down to that low of the day. So let's watch here. They break the low of the day, and then we'll watch the return. Right now we've got, again, US 30 is choppy. Bearish, bullish, bearish, bullish. It's retesting this daily point of interest. The low of the day on US 30 is right here. So is it building? Again, if we get volume closing above here, we could get another just nice little scalp back up. Oh, I'm calm, Cherry. I'm calm. I'm just having fun here. I'm calm. Good retest. Okay, so it came in not exactly what I wanted. I wanted at that yellow line. I'm pretty picky, but came up, tweezer top highs, pushed down. Volume is still below that red zone. So we're back in this consolidated area. 40 seconds to go. Can they absorb a little bit of that bullish volume? Maybe close it back down in here and then try one more attempt to break this. But the buyers are buying right into the close at the last 30 seconds. So we'll keep watching here, guys. No, no, no. I'm not revenge trading, guys. This is not revenge trading. Revenge trading is when you go in and you slam bigger lot sizing. I'm not trading bigger lot sizing. I'm just taking more trades than I normally do on these calls. I'll let you guys know if I'm revenge trading. I'm very transparent, very honest. I'll tell you guys straight up. I'm revenge. I'm not revenge trading here. I just really feel that gold, if it breaks down, could really have a nice drop, but it's just not there yet. Probably after the call. After the call, like at 11 a.m., could possibly be the time. But we're staying a little later on today's call, so we'll watch this develop. Okay, now NASDAQ, excuse me, hit the lowest point of the day. It's retraced all the way back down. So look at like the daily indicator. So you remember how bullish NASDAQ was, and they've kind of returned it all the way right back down into here. So if it, and it hasn't closed below there yet. So got a bullish candle coming back up. Again, I watch these points of interest. I watch if it can close above this yellow line. Watch maybe, again, this is just one bounce, right? We don't have a double bounce. We don't have anything. It's just bar falling, bar falling, bar falling, bar falling, and this one just turning green, or blue, sorry. Okay, and also US 30. Really nice bullish candle coming back up, but can it close above this zone? So it's building back up. 3 more minutes to go. So I'll be looking to trade again on US 30 or NASDAQ when this candle closes. 'Tim, you're watching 21,500 for NASDAQ buys, 21,500. Yeah, yeah, okay. But let's see if where it will close. 2 more minutes to go. Good push, good push. Man, gold is a monster today. Just, it's relentless, doesn't want to come down. Okay, so 60 more seconds to go. Well, let's watch the closes of these. And 10 a.m., just real quickly, guys, any news at 10 a.m.? Just there was, what was it, pending home sales in 6 minutes. And that's what we got for news coming up at 10. Okay, so strong response at the daily low of NASDAQ. US 30 did not hit the daily low, just a little bit above it. Good bullish candle. Let's see where it will close. This zone might technically be like 50% of this volume when it closes. When we make it green, maybe pull back in here. Could potentially buy off of this thing. But if it closes near the high, you could get an ignited open and just continue driving. Yeah, gold is being tough. It's tough. It's a tough security, especially for scalpers. Very, very tough to scalp. Keys to gold is give it more room to breathe and lower your lot sizing with gold. With indices, I trade more aggressive, tighter stop loss, bigger lot sizing when I'm trading indices. With gold, gold is just stubborn. I've learned my lesson with this thing. You got to give it room to breathe. You got to go lower lot sizing with it, and I'm potentially going to get stopped out here. And then I'm done with gold for the day. I don't even want to look at this security anymore. But with Nasdaq and US 30, these things they're more technical the way they move. That's why I don't really trade gold. You know, it's not my favorite security because I know how it plays these games with you. Really, really, really. I had to tell myself to get off of gold years ago. But the key to it is give it room to breathe. That's the key to it. With these securities, you can be a little bit more tighter. Okay, so will it come pull back all the way back down there? Maybe it doesn't. Okay, but you got to at least allow it, you know, an attempt to come down in here. Okay, so it's coming down now. Okay, so look at where it's coming down now. Okay, will it come exactly right down to our green zone? Will it be a little bit above it? Yeah, everyone has their favorite securities. Someone loves gold, someone hates gold. I love US 30, someone hates US 30. You know, you guys love Nasdaq, I hate Nasdaq. It's just what you're comfortable with. Look at that, okay? So did we get a wick at that green box? No. Look at it. Coming all the way down. Holy shit, okay? So it's coming all the way down to this. Okay, we got a bearish candle coming back down on gold. Okay, my stop loss I told you guys was up here. I'm still in this. It's still in drawdown. But if this is a bearish engulfing candle, close below here, that could be that leg at 10 a.m. that wants to drop down. Okay, I'm not taking any trades prior to 10 a.m. 3 more minutes, 2.5 minutes. I know if there's an A plus setup, I'm still not going to take it because we're going into 10 a.m. We've seen it 8 a.m., 9 a.m., 10 a.m. That hourly momentum switch, everything. So got a big bearish engulfing candle coming down on gold, right back to where I entered. So I suffered that drawdown. Now it's right back. So this is another thing if you want to refocus and you're back to break even, you were in a little bit of profit, you're in drawdown and the trade is back to break even, and you just want to scratch and just close and get rid of it, you can do that, okay? That's like a reset. You know, you're resetting, you're refocusing. Don't worry about the what would have, could have, should have happened. If that's the way how you want it, that's okay. Sometimes I have that too, where I just want to refocus, and I was in profit, I was in drawdown, profit, drawdown. You kind of had enough of it, just close a trade. If it came back to your break even, you know, and just refocus. But I'm like, my bias is to sell this thing, so I'm holding it. I think it can really break down, but I know that they're gonna bring it back up and bring it, like, just play these games. So it's the psychological warfare when we started the call, what I was talking about. This is the if you can learn how to handle this psychological warfare, that's what's going to make you that much better of a trader. Okay, and then now we have more of a pronounced double top right there, neckline there, big candle coming down. Maybe the second leg has the bigger volume. Maybe we'll open retail and then push. Okay, I know I don't want to take another trade on gold because it's, oh my god, this thing is crazy. 30 seconds to go. Holy shit! If it closes below this block going into 10 a.m., oh my goodness. Wow. Okay, so good rejection on US 30. Pay attention to that too, where it closes as well. And we got 10 seconds to go into the close. So you guys are watching this just like me. It's crazy. New hourly in 10 seconds. Yep, get ready. So if it closes, this is still that red zone. I'll just now kind of move it to those bodies. Okay, so opened ignited. Watch for a quick retest. Watch for a quick wick. Okay, so it's ignited, open bullish. Will it retest this and get rejected? We only have a few wicks and that block to break. So it is this bullish ignited candle. Okay, opening 10 a.m. strong, coming in, retesting this. I know I've got a lot of zones and okay, good retest. Can we take this now into a shooting star candle, just absorb those early buyers quickly and then break? Wow, still holding that ignited open. Okay, I'm very technical, very technical. So if it's still holding that ignited open, you know, just like if we were buying, it's refueling, and then it's testing again the red zone. Can they keep it down? If this one fails, where's 50% of that big bearish candle? I know it's a lot of lines on here and it's getting busy, but my cut line is kind of right there. Okay, so can we continue to maintain below this red zone right here? Now, okay, we got a little bit of structure being created on NASDAQ. Okay, we got one bottom, maybe a second bottom at this daily low. Oh my God, like gold is just disgusting. What are the US pending home sales? Let's take a look real quick. Pending home sales, did they release it? Negative 6.3. Okay, so home sales are down. Okay, good rejection. There's the shooting star candle. Can they just break this green zone? And then we're in the money. Okay, so we got a proper retest. Okay, we didn't retest 50%, the point of control. We got the lower high. We have the bearish shooting star as a seller. That's what I want. But we still got to cut through this supporting area. Okay, now are we going to get that hourly flush and just melt this area down in here? Hopefully, in my situation, I hope it can just cut right through here. All of these buyers, stop losses, just go liquidate them. That's what I would do if I was a market maker. Just cut right through here. And then if I want to go back up as a market maker, you cut through here, take the liquidity, close your short position, and then buy back here and take it right back up. Okay, but if we also get a break and volume close below here, we might flip this green zone red for the first time since 8:30, since Comex basically. Okay, so lots going on here, but we got to continue to watch this thing. And then looking at these wicks, you know, the bottom wick. If you just look at that bottom wick, did it break a low? Are they tweezer? Look at their kind of equal lows. Damn. Whoops. Okay, so that low, and that low are kind of equal lows at 3309, 3310, and then it's coming right back up as a spin top, still with this volume stuck in this consolidated channel in here. So got to let this candle play out in the next 60 seconds. Watch where it closes. It's a spin top indecision. Buyers bought at open. Remember, it was ignited at the open, came up. Sellers pushed it down. It was that strong shooting star candle coming down. When it came down there, those equal bottom lows coming right back up to where it opened, and we got some bullish volume left in it. So 45 seconds will determine where it closes, how it closes. Could initiate another bullish leg coming right back up. Welcome to gold. We got choppy market right now, okay? Even with US 30. US 30 came up, all the way back down, closed right here, came back up, coming back down. NASDAQ, same thing. just stuck inside here. I don't think NASDAQ is going to continue to just trade in here all day. It might make an attempt to close above 516, or it might close below the low of the day and continue to drop down. This whole week has been a chop fest. This whole week. I don't know if it was the short week due to US Memorial Day or what it is. I think it's more the last week of the month, rollovers in the futures, equities market options expiring with the monthlies, but real choppy week. I haven't seen an entire week chop like this in months. Normally you have maybe 1 day of chop, 2 days maximum, but to have the entire week choppy like this, it's tough this week, guys. So, and I know that a lot of traders have struggled this week. We get a lot of messages here at SST. I've found that this is a very tough week. I've struggled myself, so you're not the only one in here. If you found a way how to be profitable, then good job. Good job. Okay, so you see, it was looking really nice. Okay, this is how the market plays that psychological warfare with you. It was looking fantastic coming down. Then they close it, spin top. This candle opens bullish ignited, and we're coming right back up. So we got to rely on our supply zones or 50% of that candle now. Now we're testing 50% of that candle. Yeah, NASDAQ, bearish ignited candle dropping. Yeah, if you guys are in sells, continue selling the market. Sell pullbacks. This is my area to sell NASDAQ. If NASDAQ comes right back up to 515, right in here, that's where I'm selling. For US 30, if it comes maybe back into here, that's where I'll be selling. I'll sell that pullback. Okay, so for example, if it comes back up, that's where I want to sell. Right there, to bring it back down. So I got to patiently wait for it to maybe come back up. I can place an alert here today, just reminding me that to sell right there. Place an alert maybe right over here also on US 30. If I walk away from the markets, it will alert me right there to possibly sell. Sean, nice. I'm going to have new rules now. After 9 a.m., I won't be looking to trade gold. I got to focus more what I do on the indices because missed out on a couple good trades over here. Focusing on this garbage over here with gold. Gold is good for Comex and that 830 news. Not necessarily the security you want to be trading in Wall Street. Holy, okay. So now Dow hit the low of the day. Yeah, like what is causing the markets to push down like this? I don't see any big securities like in the negative. Like the pause on tariffs, should that not be good for the markets? You know what I mean? So sometimes the fundamentals, they don't add up. They don't add up. What's happening with US 30? It's bearish. It broke the low of the day. Okay, so it's bearish. It's making lower lows, lower highs, lower low, lower high, a new lower low. So it's definitely trending down. Same with NASDAQ. Lower low, lower high, lower low. Again, I like, instead of buying, I'm going to look to sell pullbacks. Sorry, guys, I just can't keep my eyes off of gold here. It's like watching when you're driving by and you see a car accident and you just can't keep your eyes off of it. That's what gold is right now. Vinny, nobody wants to buy the Japanese Treasury bills? No, because they're all U.S. Treasury bills. Nobody wants to touch U.S. Treasury bills right now. That's why Moody's downgraded U.S. for the first time in history. And Trump wants to add $5 trillion on that debt. Like, it just doesn't add up. Okay, so it did close back above here. God, gold is just a mess. This is sometimes I say, just stop me out of this. Just get me out of this so I can just get this shit off my chart and not look at this for the rest of the day. Sometimes I'm just saying, just take me out of this. Just so I can regroup, refocus, and not look at this garbage anymore and really focus on these. Okay, so if you want it like 50%, like just testing this volume right there, okay? So if you're in sells, this is another thing. When the market is pushing down, if you have a trailing stop loss and you're selling the market as well, if you place, like, let's say, for example, you sold right there and you had 50% of that candle, you see it didn't really retest coming there. So you can take now like a trailing stop loss to 50% of that. So this like is all secured. Like if the market does come up, then maybe it will stop you out, but at least that's secured. You can see how it came up and it's still pushing down. So if this is another big body bearish candle, then you can bring your trailing stop loss down with it. That's how you can continue to maximize a move when you catch a move and it's trending in your direction. Like I was hoping to do the same thing with gold, but it never, right there, that candle could not break this green zone. So this 3310 is showing you how strong this block is right in here. So this one is kind of irrelevant. This consolidated zone right there. We're testing again this bigger area of supply where it's pushed down. My stop again is just above that high wick at 3,322. I'm still in this, but it doesn't look good. Again, here, US 30 did not close below this entire green zone, so it broke the low of the day and it closed right at that purple. We're opening bullish, coming back up and pushing down. So we'll watch this. If we close here, it will drop. Yeah, that's what the market is doing. Like, it's frustrating buyers too. Buyers are getting frustrated, it comes down. Buyers go back up, it comes back down. Buyers go back up, it could be coming back down. Okay, so not just sellers, buyers are getting frustrated in here as well. Unless you're looking for short scalps, yeah, you can buy that, catch 30, 40, 50 pips, but the bigger moves are the bigger moves. So not everyone is just scalping individual candles here. So buyers are getting frustrated, sellers are getting frustrated. Buyers are getting frustrated, sellers. Buyers, seller, it's just the psychological warfare for retail traders. Okay, it's retail traders. The markets are just continuing to accumulate. They will redistribute this volume just when it went. Oh man, I don't want to change that. When it's the time to release, they will release. So just when it's ready, it will either come back up bullish, test 3,325. If that's the case, I don't want to be involved in this trade no longer, okay? That's my maximum risk up there. I don't want to be part of that. But also, if they can accumulate the sellers enough to break right there, that 3,310, that's where we can drop down to 3,305, no problems. Okay, so, and right now, this is where the accumulation is. Wow, okay, so good response now on US 30. Coming up, 10:15 is now in 40 seconds. Okay, so that's approximately 50%. Like, even if we grabbed our Fibonacci tool on that ignited bearish candle and coming down to where it closed, you can see 0.5 and right here, 618. That's that zone right there. It's right above our green box. Okay, so if this closes above there, we'll figure out where 50% is, just in case it pulls back one more time in here. Maybe if it closes strong, it could continue to come back up and test here. So this is where, I measure moves prior to taking the trade. If it just feels right, that's 50 pips. Okay, up to there is 60 if it gets back up there. Okay, so there's the close, right? So where's 50% of it in case there's a pullback? Right there. Notice the size of the wick. It's a very, very, very small wick. Okay, so can it just, how far down will it come? Okay, so it's coming down now. It's small doji retesting it. Again, it's retesting that yellow line, so it's holding. So I'm going to buy. It's holding momentarily. I'm looking for that push to come up. Again, placing stop loss. I can go very, very, very tight. Whoa, I don't want to move that shit. What? Sorry, guys. My cursor. Okay. Oh, my goodness. Okay. Like a tight stop loss would be, see guys, it's hard for me to explain why we're trading like this. A tight stop loss would be right below this yellow line. If you want to give it room to breathe, bigger move, you can be below the daily position, the purple line, and also below that low. But if you want to reduce your risk, just below 50%, that's good enough. I'll do this one with a tight stop loss just to fill this zone, and I've already measured it. 50 is right there. Inside is 55, 60. Right there, it's about 30 pips. You can grab that if you want and just get out. Like, that's why I like trading US 30 compared to this shit with gold. Look at that single bar candles, 30, 40, 50 pips. Just like that with zero drawdown. Why do you guys think I like scalping this as opposed to this shit over here with gold? Like, oh my goodness. Okay, and if you're not quick enough to do anything, then the trade retraces back down. Then you gotta continue to go with the flow of the volume. That's why you have a stop loss in the market, or you have scalp rules when you're trading. You have to have some sort of rules. Okay, well, on one of these sessions, I'm gonna teach you scalp rules, and we're gonna trade single bar candles. So you can see how I trade single bar candles, because that could have been in and out. Boom, 30 pips. Could have recovered a little bit from this gold trade just off of that bar alone. But I know it's not what you guys are looking for, so I got to hold trades longer to develop. And now you see how it turns into drawdown. So that's why it's very hard to teach scalping when some traders don't understand this kind of philosophy of trading. So I told you, tight stop loss just below 50%. Now it's in drawdown. I didn't do anything on that 30 pip move. So this is where I kind of get frustrated myself on these calls. But I got to kind of trust 50%. If it will hold, if not, that's my maximum risk. I didn't feel like giving it all of that stop loss all the way down there because it's a bearish move. So if it doesn't hold right here, it will definitely maybe possibly come back down there. I don't need to give it any additional risk. So I'm possibly now going to get stopped out of this. That's why my game is scalping. Yep. See, I'll let you guys know when they stop me out here. Yeah, that's it. So that trade stop out, okay? And then I'm going to look back at this and say, well, what the hell was I doing? Why didn't I take out my 30 pips? Why didn't I go to break even? Why didn't I take out 80%? It's just, I trade different when I'm trading with you guys watch. I don't know. I still don't understand till this day why it's like this, guys. I'm not a streamer. I'm a trader, okay? So, and I always have you guys in mind for bigger moves, but oh my God. That's why maybe we got to get off of 5-minute candles and go to 15s for these kind of sessions. because it really affects the way how I trade. I'm not making excuses. I'm just saying it really, really affects the way how I trade, because I know what I'm looking for out of that bar. That's all I'm looking for, is that just that one move. And I don't want you guys to think like I'm a shitty trader because I'm taking stop loss after stop loss. I'm just trying to hold trades longer in a tough market. If I just did my pip and dips all week, I would have been very profitable on all of these sessions this week. But when you look at it, if you watch the videos, go back, stop loss, break even, stop loss, because I'm looking for longer trades. And it's tough to look for longer trades in all of this madness. For all securities in chop, it's very difficult. That's why when it's choppy ranging markets, the best way to trade it is to scalp in and out, in and out, in and out. Because the market, when it's choppy, knows that a lot of traders are holding for bigger positions and don't want to give it too much room to breathe. But that's like, I take responsibility for that, guys. I'm your educator. I take responsibility for that. That's why it does affect me, because I'm always considering you guys. And then when it goes to 30, I don't know if you guys have quick enough executions to get out on that, because that's what I also think about. I think about your spreads. I think about your executions. I think about your broker speed. I think about the delay on YouTube as well. I think it's like 15, 20 seconds behind. So when I'm saying I'm taking a buy here, YouTube doesn't get it until like 15 seconds later, and that delay kills. And then when I'm saying live, I'm getting out, you guys are just hearing that I'm getting into the trade. So all of these things, every time I take a trade, I'm thinking of all of these things. So when I look for a bigger move, I'm thinking about the YouTube delay. I'm thinking about you guys' execution speeds. I'm thinking about your guys' spreads. I know that maybe you're not looking for just 20 pips. You're looking for 50, 75, 100. So then we got to hold trades. Like you see, I'm still holding gold. And where that move coming down, normally that's kind of what I look for. Where it closed below and then it opened, like from there to there, that was a 40 pip move. And I didn't even do anything. Normally I'm doing something there. So, and then now you see where it's barcoding now, okay? Bearish, bullish, bearish. Will it come back up? Again, I'm watching this area. If it closes above here, we could continue to move up. That would be like another single bar scalp coming right back up. But I hope more traders really who are live traders teach the real shit about trading. Not just make a reel of your profitable trade and post one reel a week. I see that. And I see other traders that are live and they go crazy for 10 pips, 15 pips, and they get a lot of likes, they get all of this. And I'm being hard on myself for 40 pips and still. And then I see other traders are going for 10 pips and they're going crazy. And I'm like, I don't know. Like, I, I don't know what to do on these calls. Okay, so now again, look at gold. We're approaching 10:30 in 6 more minutes. We're coming back down. So when I look at it, while I'm in a trade, whether it's in drawdown profit, I still look at structure. We got a lower high, we got a lower high. We're still below this red zone. Okay, so like I was saying, buyers are buying. It's a bigger range. It's a big range in here. Like from the entire range, if you measure it from this green box to that red box, it's a 80 pip, 90 pip, 100 pip range, big range. Okay, so anyone trading in here, if you don't have a 50, a 60, a 80, 100 pip stop loss, you're getting stopped out all day in here. Buyers are getting stopped out, sellers are getting stopped out, buyers, sellers, buyers, sellers. I gave it more room to breathe for a bigger move down. So that's why I wasn't looking for just that 40 pips. I'm looking for 100. I'm looking for more. But we got to continue to get selling volume closing below here. Yeah, Omar, you're done with gold today. It is rough. Like, it's rough. That's why this security is very difficult. Very difficult. Unless you like psychological warfare, then this is the security for you. But this can really, really test you. You know, if you want to test your patience, try a demo account with gold. Try like trade with it, but do a demo account. Don't do your live money until you really understand how this security moves. I still to this day don't know why this is the most popular security. I still to this day don't know why. Like I tell everyone, I could trade US 30 all day, every day for the rest of my life. Just this security. Nothing else. This thing is really, why is it? Why do we love gold? Why? And why do we put ourselves through this on a daily basis? I don't know why. You guys tell me. Every time I come on here, I would love to just trade US 30. You guys always tell me, Ron, let's do gold. Why do we love this? What is it about this security? Why do we put ourselves through this madness every day? Because it shimmers and shines, Mark. Yeah, because it's very shiny. It's a drug. Yes, it is. It keeps us coming back. We're addicted to this. Okay, you see here? So we came back up, we're filling that prior wick. So what I was saying, if I opened my stop loss, remember what I said? I had a tight stop loss right there. Below 50%, they tagged me out. But remember what I originally said? If I placed my stop loss, I opened it up a little more and I placed it below the low of the day in that wick, you see, I still would have been alive and I would have been right back in profit. So that's the difference between placing a very conservative stop. Conservative stop is because you just want that quick little move. That's what a tight stop is for. If you want a bigger move, you have to place your stop loss larger and below a structural area. So that's where you're increasing your risk. You're giving it more room to breathe, more stop loss, but then that's where you got to decrease your sizing to make up for that difference. Okay. But we're 3 minutes away from 10:30. We're going to get a new 30-minute candle. Gold, again, is pushing down. I'm not getting excited. I'm not jumping up and down in the chair because I know that it could just come down and go right back up again. So, but we got to get a closure below this green zone right here. So we're right back in this consolidated neutral box. Sorry, this thing keeps changing. Okay, so I'm again in a little bit of profit. So it was in profit, drawdown, profit again. So it's that psychological warfare. I'm not giving up on gold yet. Waiting for that bigger move. Mo, yeah, it's a marathon stream today. We're staying late today. It's because gold. Gold kept us in here. Otherwise, we could have just been playing scalping US 30 and NASDAQ and catching a few pips here and there. But this thing, it's like a drug. Okay, so number one, we got to go through the technicals again. Can we break these wicks? We have to create a new lower low in the market in order to push down. It does us no justice if we keep just coming in here and it's a higher low or it's equal bottom lows. Just with this candle, this is the candle. Prior to 10:30, we have 90 seconds. Just break for a new low. That will interrupt the entire algorithm going into 2:30. And then maybe buyers now will pull their offers or their bids and then place them a little at better areas. More sellers might be on top of us, placing more offers. But again, that wick, like right there, I'll place my cursor. It needs to break 3309.72. If it doesn't, get ready for the roller coaster ride right back up. Okay? I'm telling you guys, watch this so you guys can see this live. Look at that. Okay, so it caught a wick, moving back up. Where will it close? We've got 40 seconds to break this. It's disgusting. Believe me, I've been in this trade for hours now. See what I mean? For 40 pips, takes hours with gold. 30, 40 pips with one candle in minutes with US 30. Like that's why this security is my favorite. This is headaches. I don't want headaches in my life anymore. I got enough. I don't need headaches. This thing will, again, a lot of gold traders are bald, receding hairlines, aging because of this security. This one, we all look young, we look fresh, we look healthy. Look at US traders, they're probably all healthy looking. And then you look at gold traders, probably all stressed out and balding. And it's because of this security. But did we close below there? No. So we're still in this green box. So it doesn't surprise me that we've got a green candle opening bullish at 10:30. Okay? Doesn't surprise me. Oh man, my mouse is really pissing me off. Can't even stretch that across. Okay, so again, it's coming back up bullish. Can we identify where 50% of that body of that volume is? Yes, we do have a fair value bearish zone, that wick and that wick. If I wanted to create a zone within a zone, I could, but it's going to get too many zones. We have a retest. We got a bearish candle breaking. Can we just drop now down to this red line, get it down to 3306? That was that 15-minute area of support, okay, right here. So you see our 15-minute candle, that's what I did. I cut that in half right there. That's where I got that red line. Okay, now we're coming down. We're good in the money now. But is that what we want? We held all of that drawdown just for this move, or are we looking to come, oh my goodness, sorry guys, my mouse is acting up. Are we looking to come all the way down in here for that 90, 100 pip move? Okay, but again, we have not closed yet below this green zone. It might just come down here, catch a wick, and go right back up, right? So we got to follow this. This might be our first 5-minute bar that's going to close below this zone this entire session since Comex. So it's returning all of the volume back down. Yeah, gold will make you throw your phone. Gold will make you break your keyboard. Gold will make you do silly things. But the only thing is, just don't over leverage. That's it. Okay. But you see why, guys? Let this be lessons. I hope this call is good lessons. That's why I respect these lines. Why I put them there. So if it comes down there, I do something. Like again, I'm educating too much today, and I'm not following my plan. That dropped down 70 pips. And I didn't do anything. And then now you see it coming right back up to retest this zone. This thing could close above here and flip bullish and come all the way back up. And then I was up 70 pips and I still didn't do anything. So hopefully you guys can learn on these live calls of mistakes that I'm making to show you guys. Why it's good when you're in profit and it does what you want. Get out. Get your money and get out. Or close a certain amount. Okay, so US 30 filled and broke this zone, but then got rejected back down. Okay, so it did not close above there yet to flip this zone. It's still red for a reason. It might come back down. We've got to follow this now, volume coming down on gold. Michelle, we lose out on so many gold trades. You can trade US 30. Don't wait for me to tell you what to do. I can provide you the zones and just trade off the zones. Like I'm not here to like babysit. I got to babysit my kids upstairs. I'm not here to babysit people. You can do your own thing. The zones are there for you guys. Do your thing. Don't wait for me to tell you what to do. Okay, but also, if you were in buys, would you have done anything up there? I'm asking you guys. Would you guys have done anything? If you didn't, then don't be surprised that the market is coming down at a red zone. Unless you get the body of volume closing above there. Like here, I didn't do anything. Now it's a bullish pin bar trading right back in here, and it would, watch, it might come right back up to retest 50% of this. 30 seconds to go. Yeah, Borex, I don't have the patience like you. You love gold. I don't. Um, okay, so look at it. It's a hammer candle. That's the complete opposite candle that I wanted in this situation. Okay, and you see, did any bearish volume close below that zone? No. So it's still holding. Now we have a bearish ignited candle that opened where about 50% of that previous candle. Now it could come down again, but it could just come down, pick up a higher low wick, and come right back up. But if this candle can come down bearish now and close below here, then we might be officially changing this zone to a resistance and maybe continue to push down. But we've got to continue to take our time. So up 70 pips, I didn't do anything. I'm still in profit, but not what I want. And this thing is retesting now. Green zone can flip and come back up here, and then that's drawdown area again. Okay, and I asked myself again, why did I not do anything? I have no idea, because I'm too much into educate mode today and not trade mode. So I got to continue to trust 50% here. This daily yellow line, if it comes up, maybe we'll reject off that. Maybe now we're making those lower highs to come down. But what that candle did tell me is we did make some new lower lows in the market. Okay, so that's important to, if we're holding trades and we want to continue to move down bearish, that candle did help us to move down. I know it's not the result, the close we wanted, but that was the first candle that broke all of these prior lows. Okay, so that did damage. It did some damage, but it didn't get the close that we wanted. So maybe this bar now coming down will continue to come down and officially close below here. Okay, look at look at what's going on here with US 30. Okay, so it's bearish, bullish, bearish, bullish, came up to the resistance, came back down, coming back up. So it's basically barcoding too. If you're not individually scalping these candles, like it's in a tough zone as well. Sellers are getting frustrated, buyers are getting frustrated, sellers are getting frustrated, buyers are getting frustrated. I don't think US 30 is going to trade in this zone this entire day today. It will eventually maybe close above here, retest this and drive up to there, or sellers will push it back down at the low of the day, close below there, and then we start pushing down. Same with NASDAQ, same thing. See how they're just same thing, but shorter bars, half the size. That's again why I choose to scalp US 30 over NASDAQ. One bar is 30, 40, 50 pips. One bar of NASDAQ is 15, 20 pips. It makes my decision real easy when I'm scalping, where I could be in a trade for 30 seconds, go up 30, 40, 50 pips, just open, close, open, close, open, close, hit 3, 4 of these candles a day, you got 100, 150, 300, 200 pips a day. Or you can sit and lose your hair with gold over here. Pop, you aged 10 years in one session? Oh my goodness. Welcome to the club. Yep. All you can do is just smile. Just smile. That's it. That's all you can do in these markets is just smile. It's tough. They're not easy. That's why when someone tells me trading is easy, I'm like, it's not easy. It's not easy. It can be easy if you have the right attitude. If you can handle drawdown with the right attitude, yeah, then it can be easy. But some people can handle the psychological, the emotional warfare better than others, you know. And then there's other traders that, man, like for years for me it was revenge trading. It was just like, oh man, I struggled for years with that, and I couldn't fix it. So again, now it's moving in profit again. But I got 40 seconds to go. Is this going to be a bearish bar closing below? So, but you see how it retested 50% right there, that cut line? So that's why I wasn't stressing out, because I still relied on 50% of that point of control. I know it sucked giving up all that profit back up, and then I could have definitely gone in drawdown, but if you let the trade play out naturally how it should, these areas, and then it played out perfectly right there. So it's coming down. Now can this candle do its job and close below this green box in 5 seconds? I'm going to assume it's going to close below there, so I'm going ahead and making this red to get quickly for some quick moves. Now I notice the size of the wick. Relatively small wick. We have an ignited open. Okay, so all it needs to do is break, which it did. Can we now come down, back down to that red line down in there? We'll go back up our 70 pips, and maybe we can get rewarded for holding this a little longer and get down to our green zone down in here and collect 90 or 100 pips. And then down there, listen guys, I'm going to verbally say this right now. If it comes down to this green box, that's definitely where you want to go to a break even, and that's definitely where you want to scale out a little bit of profit, okay, in this green box down here. So I'm telling you guys ahead of time. I'm already getting my programmed to do that right now, okay? So we got a bearish ignited bar. There it comes down, okay? You don't have to wait to the green box if you don't like. If you're happy right there, then do what you got to do. Don't wait for me to tell you guys what to do. I just got some history with gold today. It's me being stubborn with this today. Okay, so we're out of that consolidated area now. I can get rid of that. This red zone now will be for retests. This one held good up here. So we didn't get that. Remember what I said? We'll either get a move coming up here or a move coming down. So we got this arrow move coming down. But you see how it's struggling at this red line right here. Okay, so why is it struggling there? Look at your 15-minute time frame. That's where I got that line from. That is exactly cutting that 15-minute candle in half, and you can see how we're struggling there. But this is a 15-minute bar that's going to close in 3 minutes too. So our 15-minute volume is going to close in 3 minutes. Will this bearish volume, can we hold another 3 minutes? Will that 15-minute volume close below this point of control in this 15-minute candle? Then we could definitely push back down, okay? But this is where the battle is going to begin in the next 2-3 minutes at this area. So what I like to do is focus on the 5s. I know what this red line represents, and now we're breaking it, coming down with 2 minutes and 30 seconds to go. Okay, remember what I said at this green zone. Remember what I said. Okay, do your thing. I'm going to, oh, fucking come. My mouse sucks. Okay, okay, break even, and I'm going to close out 80% at 90 pips down there. Okay, so I've recovered my entire day with this trade right now. Okay, I had to stick with it. Like, we're working overtime here. It's almost 11 a.m. But you see why I stay with one security, guys? I don't like flip-flopping. Today, you saw I stayed with gold. I went through the ups, the downs, everything with this. But in the end, it worked out to officially do what I wanted it to do. It took time to develop. That's gold. You know, not everything is just going to drop down perfectly. You got to learn how to navigate through all this shit here. Okay? But you see how I stuck to what I said I was doing. When it came down there, break even. When it hit the box, I'm taking out 80%. That's exactly what I did. Now I have 20% running. If it wants to continue to run, perfect. But the bulk of the trade came down to do what I wanted it to do. Okay? Does that make sense, guys? This was a tough session today. This entire week has been tough. Okay, I haven't moved from this chair for almost 5 hours. I pissed my pants like 6 times already. I'm just joking. I'm joking, guys. But I used to scalp 24 hours a day, and I would sit in a chair for 24 hours a day. I'm just programmed like that. Now my body is broken. My back is broken. My neck is broken. I got tendonitis. I got to get those glasses now that block the lights of the screens. And oh my God, we're just breaking down here. Hopefully, while my body breaks down, gold can break down too. So the pips can help cure me. Pips are the medication for all illnesses. But guys, see why I do something? Not those woulda, shoulda, couldas. Now I'm happy that what I did, I took out 80% down there because look it came down right in the green box, and look at that. So if I stayed and I didn't do anything, now I got to go through that psychological warfare again, coming back up, going back down. It might not ever come back down. Now it could be coming back up and then start that bullish leg. Mark, I'm sounding like your mom and she's 93. I know, my mom is in her 80s and she's stronger than me. Believe me. But guys, holy, okay, we can't make up things on these live sessions, okay? So, it would be nice to make it just a fancy reel of just one trade we took and then to showcase that was our entire session, a 4-hour session with a 60-second reel, and just highlight one good trade. That's what most traders do. But we don't do that. We full content. This is a 4 or 5 hour session. We show you the ups, the downs, everything. And then when I look at US 32, it's not doing much. It's just still barcoding in here. NASDAQ is still barcoding. But what I look for is how it's building. I look how it's building. It's building, ascending. It's like a plane going up. At the lowest point where it broke the low of the day, we got a higher low, we got a higher low, and a higher low, right? So it is building. So this could definitely continue to ascend and build out of here, and you might be looking for buys. But you see, guys, why my target was this green box. Okay, it wasn't just by luck that was the former purple line. That was our previous high of the day, and that's how high we went up today, and then slowly it started to come right back down to retest the previous purple line, which was resistance at that point. Again, that's a static line, and now you can see how it's static support going forward. Now, you see the trade? I got 20% invested. I still have a runner in this trade, but the bulk of the trade taken out down there. You guys got that? So if it comes all the way back up there, that's my 20% break even, and I'm going to shut gold for the day and never look at the security again until tomorrow morning. And hopefully I don't take a trade. Maybe you guys remind me, do not take any trade on gold if it's 9 a.m. because you see how we rushed NASDAQ, we rushed kind of US 30. So guys, we got a plan what we got to do on these calls, okay? Gold will be for 8 a.m., Comex 8:30, 9 maximum. And then we'll leave it on our charts, but then we'll focus on our indices as we move into Wall Street. Okay, so we got to have discipline on these calls as well with securities. And then you guys kind of know what we do here. But maybe next week, Dave will be back with you guys in Zoom for the morning sessions. I'll go back to some post-New Yorks, mid-afternoons. I like trading at that time. Kind of when Wall Street settles down, we come in around 11 a.m., 12 p.m., that mid-afternoon session. Sometimes we find some good trades at that time. Sometimes it can be choppy, but look at Wall Street. Wall Street can be choppy as well. But guys, I need to take a little bit of a break. I'm going to go make some breakfast. Hopefully you guys learned something. Hopefully you guys had some fun today. Okay, so we had some wins, we had some losses. I can't even remember if we had break evens. I don't even know, but you might learn something on our calls. But sticking to a plan from point A to point B, you gotta, and this is where you eliminate greed. As it came down there, 90 pips was the measured move. Obviously, I want 100. I want 150. I want it to go all the way down here. I want it to come back down all the way here. Okay, but there's levels. There's levels it's got to get through to come back down there. So that was a nice level right there. From that yellow line to that purple line, measured move. Yeah, we did suffer some drawdown, but I stuck with gold. Maybe it was me being stubborn. I stuck with it. But whatever it is, I like to stay with my security. I don't like to leave liquidity behind. You know what I always say? The market maker can get me right now, but I'll come back and I'll get my liquidity. It might be half an hour later, it might be an hour, it might be in the mid-afternoon, but always keep that in mind, guys. If you're not leveraging too much, you always have an opportunity to come back and grab your lost liquidity. Just like the markets. When they will come back, they'll pull back here, they'll grab liquidity. They'll come back. They never leave their liquidity behind. So it's a game of capital. If you know how to utilize your capital in these markets, then you're thinking like a market maker, and then you're trading the way how they trade. So, but when you over leverage, then you're going to be tapped out, and then you have no more capital. You have nothing to come back and grab your liquidity with. It's not revenge trading. It's not revenge trading. Revenge trading is kind of when you take a trade, maybe you'll go opposite direction, but you kind of 3x, 5x that trade to make up. And that's kind of, if you're trading within your risk, like I was trading 0.2% adding, this and that, but you can come back and get your money slowly. It takes longer, but it's not revenge trading. And then you see now the same block, static block, that bar closed above, and so that's a green. If I was going to continue to trade for the remainder of this day again, or this afternoon, or right now this session, that turns to a green zone. So if it comes back down, I could be buying off that and going back up now. It doesn't necessarily mean it's going to sell all the way back down. You see it sold down to there. So the sellers, ourselves, sold. We shorted, we sold at this point, sold high, and we bought our position back lower when we closed it, okay? But while we were doing that, there was buyers waiting to get involved in the market. You know, this big run up, okay? These buyers in here were waiting patiently for hours to get triggered. And they just finally got triggered in the market, and they're in profit now. They waited for that entire pullback. So you're talking about patience right here. Whoever bought at 3305, they were patiently waiting all the way from 8:15, 5 minutes prior to Comex. Okay, you see they missed the Comex run, they missed the 8:30 news run, but they maybe placed an alert, got alerted, and they bought that wick, or they had pending orders that got executed and right into profit with zero drawdown. So if you want to learn how to be very patient and disciplined, you need to learn how to wait from 8:15. When did this come back? 10:40, 10:30. That was almost 2.5 hours for that trade to materialize. Do you guys understand like how much patience you have to have? That's 2.5 hours of, but I don't, maybe they weren't sitting at the computer like us. Maybe they saw the move and then right looking at that structure, and that was a good opportunity to buy in. So us selling, we sold where the buyers are. The buyers took our bag, we exchanged, and we took the profit. We sold high, bought low. They bought the bag, and then they had new buyers here, and now they're going right back up. So that's trading, guys. I wish I could talk to you guys all afternoon, but we do have an afternoon session later on in Zoom, 2-minute analysis, 2-minute price action. That's at 1:30 p.m., guys, and we'll go till 3 for 90 minutes. So if you want to join us and learn more about 2-minute education, you're welcome to join us. Everyone on YouTube, visit our website right over here, stocksnipertrading.com. Join us. Those are those live Zooms. If you want access to the free blog, go over here on blog, read up on anything here. We have tons of education if you're with myself and Dave. If you want to learn anything about what we just did in the last 5 hours, there's multiple education here, long form, short form, all webinars, all recorded with the group. They're all here, and we're going to make more and more and more as we go along. So guys, just be careful with the with any news this afternoon. Lots going on around the world affecting all of these securities, and just careful trading, guys. Also pinned at the top of the YouTube is the free Telegram channel. You're welcome to join us over here as well on the free Telegram. Good buys on gold at 3,300. Half lots can turn into 700. $1,000 trades, guys. So, hopefully you guys continue to learn through me in a tough week. It's been tough. I fully admit it. I'm fully transparent, guys. It was a very difficult, the week is not even over. Tomorrow was Friday, the last day. It could even get tougher tomorrow. So we got to trade very responsible, smart. We'll see you guys tomorrow, 7 a.m. And then you guys on Zoom, 1:30 if you want to join us. Join us for a little 2-minute education, okay? We'll see you guys. Have a good day today. And if you're going to continue to trade, just navigate through all this chop, wait for the markets to open up a little bit, and just follow the trend of the markets. So even though US 30 is building, it's still, look, like a lot of lower lows, lower highs, lower low, lower high, lower low, lower high. You know, it could come in here and then continue dropping down. Just be careful. Look for confirmations. Look for bullish candles to close above here, flip zones, retest, can fill up wicks to bodies, then to the next zone. Okay, take it candle by candle, zone by zone, line by line, and whatever time frame you trade on, stay on that time frame. If you're a 30-minute trader and you wait for 30-minute candles to close, don't even look at these 5-minute candles. Focus on your 30s, right? You got to focus on these. If you look at the 30-minute picture, look at what the 30-minute traders are looking at. That's very difficult to navigate around. Samuel, intro on fibs. Yeah, if you guys want to do that, we can do fibs on the 2-minute education. Samuel, we'll do fibs. Okay, that's how we'll start the call. You guys let me know what you want to learn with the fibs. We'll add the fibs. We'll look for retracements, where to place them, on what time frames, things like that. Yeah, definitely. Thanks, Samuel, for reminding me. But we'll make it this afternoon a 2-minute session, 5-minute session, whatever. Just a lower time frame session, and we'll put the topic on Fibonacci retracements. Okay, perfect. So we'll see you guys. Thanks for joining, everyone. We appreciate you guys on YouTube. Thank you guys for the likes. Subscribe to the channel. Join the team if you like. And everyone on Zoom, I appreciate all of you guys. Thank you guys for putting up with me today. And we'll see you guys in a little bit. So have a break, and we'll see you guys at 1:30. Thank you. Thanks, everyone. Have a good day.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.